Nhưng tôi muốn nói về lý do tại sao GitLab lại tuyệt vời. Không được họ tài trợ, không có nghĩa là đây thực sự là một người hâm mộ, vì vậy hãy cùng tìm hiểu lý do tại sao GitLab lại tuyệt vời. Đầu tiên, chúng ta cần nói về DevOps. Hiểu GitLab có nghĩa là hiểu DevOps. Phần lớn quá trình xây dựng một phần mềm tẻ nhạt thực ra là những gì xảy ra sau khi bạn viết mã. Kiểm tra mã đó để đảm bảo mã sẽ hoạt động cho người dùng của bạn, sau đó thực sự đưa mã đó ra thị trường và giám sát mã đó để đảm bảo mã hoạt động tốt, đó là một phần của quy trình. Vì vậy, khi đề cập đến DevOps, có 3 phần chúng ta cần hiểu. Có ghi hoặc tích hợp liên tục, kiểm tra mã của bạn thường xuyên, CD hoặc triển khai liên tục, triển khai mã của bạn thường xuyên, giám sát hiệu suất ứng dụng, theo dõi hiệu suất ứng dụng của bạn. Vì vậy, hãy tưởng tượng bạn được giao nhiệm vụ viết một tính năng mới, bạn đã hoàn thành xuất sắc công việc, bạn đã mã hóa nó và bây giờ thì sao? Thực sự là còn lại 2 thứ. Bạn cần hợp nhất mã đó vào phần còn lại của cơ sở mã, bao gồm cả việc kiểm tra kỹ mã đó trên một số chiều, đảm bảo bạn không vi phạm bất kỳ điều gì. Thứ hai, bạn cần đẩy cơ sở mã đã cập nhật đó. Cuối cùng, khi nó được đưa ra thị trường, bạn cần đảm bảo rằng nó hoạt động tốt. Một lần nữa, đây là một phần key, CD, APM của nó. Về cơ bản đây là DevOps. Và hãy để tôi đặt cái này ra khỏi đó. Khi bạn sử dụng Google DevOps, khi bạn nói chuyện với mọi người về DevOps, có rất nhiều cách hiểu khác nhau về DevOps là gì. Một số người nói đó là một triết lý, một số người nói đó là một chuỗi các công cụ, một quá trình. Nhưng đối với video này, chúng tôi thực sự đang nói về DevOps và cách nó liên quan đến quy trình làm việc và công cụ. Đó là lý do tại sao chúng tôi nghĩ GitLab là một công cụ tuyệt vời cho bất kỳ thứ gì liên quan đến DevOps. Bây giờ, tùy thuộc vào nơi bạn làm việc, giả sử đối với việc theo dõi sự cố, nơi chúng tôi theo dõi lỗi và yêu cầu của mình, bạn có thể sử dụng Jira. Thứ hai, Asana. Để kiểm soát nguồn, bạn có thể đăng lưu trữ mã của mình. Vì vậy, bạn có thể sử dụng GitHub, bạn có thể sử dụng Bytebook, bạn có thể sử dụng GitLab, bạn có thể sử dụng thứ gì đó khác. Đối với key, CD, kiểm tra và khám phá mã của bạn, thành thật mà nói có quá nhiều công cụ mang tên các bạn, nhưng có key, Jenkins, có Hanner, có Drop, có Argo. Có rất nhiều công cụ thực hiện công việc đó. Dành cho tất cả những người đang truy cập. Không, hiện tại tôi không quan tâm đến việc sử dụng công cụ của bạn, nhưng để theo dõi, có những công cụ phổ biến như Datadog, Grafana, New Relic và danh sách này vẫn tiếp tục mở rộng. Hầu hết các công ty sử dụng nhiều công cụ để tránh sự ràng buộc của nhà cung cấp. GitLab nhận định rằng bạn nên thực hiện tất cả những điều này trên một nền tảng và hợp nhất ngăn xếp của mình. Theo ý kiến của tôi, GitLab thật tuyệt vời nếu bạn là một công ty khởi nghiệp, nếu bạn là một tổ chức nhỏ hơn hoặc bạn không có nhiều bộ phận chuyển động, bạn không có nhiều tài nguyên. Vì GitLab thực sự tập trung vào việc cung cấp cho bạn mọi thứ bạn cần để bắt đầu. Một lần nữa, bạn có thể sử dụng GitLab để theo dõi vấn đề. Vì vậy, tương tự như Jira, bạn có thể tạo vé và bạn có thể tạo lỗi và bạn có thể sắp xếp và bạn có hồ sơ tồn đọng. Cách tôi luôn sử dụng GitLab chủ yếu là để kiểm soát phiên bản. Bạn có thể sử dụng nó để quản lý kho lưu trữ mã của mình, xử lý việc hợp nhất và thay đổi từ nhóm của bạn, tương tự như GitHub, nhưng tôi luôn thích giao diện người dùng của GitLab qua GitHub. Đó chỉ là sở thích cá nhân. Và hãy nhớ, mã ứng dụng thực tế được đăng trên máy chủ GitLab và các nhà phát triển sẽ lấy các bản sao cục bộ của mã đó vào máy tính xách tay của họ để phát triển các tính năng hoặc lỗi mới. Nhưng điều tôi thích ở GitLab, nó cung cấp một tiện ích để đóng gói và lưu trữ bất kỳ phần phụ thuộc nào mà ứng dụng của bạn dựa vào. Vì vậy, chúng ta đang nói về các gói, sổ đăng ký vùng chứa. Hầu hết các nhóm đều sử dụng trình quản lý gói như npm. Đối với nhiều ứng dụng quan trọng hơn với các gói lớn hơn, các nhóm sẽ sử dụng thứ gì đó như GitLab để lưu trữ các gói đó. Bạn có thể làm điều tương tự trên các nền tảng khác, nhưng GitLab là một cửa hàng tổng hợp. CICD, tôi rất thích CICD trên GitLab vì bạn thực sự có thể xây dựng các bước. Bạn có thể tạo tệp YAML và nó thực sự có hình ảnh đẹp mắt khi thấy mọi thứ di chuyển từ trái sang phải nơi nó đang xây dựng, đang thử nghiệm, đang triển khai. Có thể bạn có những môi trường khác nhau, nơi bạn có sân khấu và sản xuất, có lẽ điều gì đó cần phải xảy ra trước khi bạn đi vào sản xuất. Có lẽ bạn muốn thêm một khách bổ sung. Mình đã test rồi, mình nhìn rồi nhấn nút, vào prod. GitLab cung cấp cho bạn những loại khả năng đó. Và cuối cùng, bạn có thể thực hiện giám sát. Bây giờ, GitLab, thành thật mà nói, nó không nhất thiết phải có các tính năng tương tự như Datadog hoặc New Relic, nhưng nó có sẵn và đối với hầu hết những người mới bắt đầu, nó cung cấp rất nhiều tính năng để hầu hết mọi người bắt đầu. Một số lưu ý cuối cùng, đối với tôi, GitLab đã thực sự tìm được cách tiếp cận các tổ chức đang cố gắng thực hiện nhiều việc khác nhau nhưng muốn có một số tùy chỉnh đằng sau nó. Và nó mang lại cho họ sự linh hoạt để nói, này, bạn có thể làm mọi thứ trong GitLab. Nó thực sự là một điểm dừng chân cho mọi thứ bạn có thể cần để bắt đầu ứng dụng của mình. Nhưng chúng ta đã bỏ lỡ điều gì? Bạn có những câu hỏi nào? Tôi có hoàn toàn sai không? GitHub có vượt trội hơn GitLab không? Hãy cho tôi biết trong các ý kiến dưới đây. Đó là tất cả những gì tôi có. Công nghệ ra.
Vậy thì làm sao người bình thường giống như em biết được khi nào bán cổ phiếu mình đang ôm và khi nào bán và khi nào ngưng?
Kính thưa quý vị, đây là một câu hỏi rất là nghiêm túc. Tôi phải trả lời một cách rất là nghiêm túc. Thì đây là cái sự sống còn của tất cả những người mua bán thị trường. Không có một cái business nào, không có một quân đội nào, không có một cái tác chiến nào mà khi mà mình quyết định mình bước vô một cái trận đấu mà mình không có được rút quân. Quý vị nhớ là trong bất cứ một cái cuộc chiến landing nào, trước khi chúng ta khai quân, khai chiến với bất cứ ai, khai chiến mở open một cái dự án nào, bắt buộc phải có con đường thoát. Có nghĩa là exit strategy của chúng ta là cái gì? Nếu nó như vậy, chúng ta bán bỏ hay là chúng ta giữ, hay là chúng ta bán mức nào phải bán, mức nào phải ra và mức nào phải cut loss. Cũng như là quân đội cũng vậy, khi nào phải rút quân và rút quân bằng đường nào, tất cả cái đó phải có layout trước khi chúng ta bước vô chiến trận, thưa quý vị. Nếu mà bước vô bất cứ một trận chiến nào hay là bước vào bất cứ một cái deal nào mà không có con đường rút quân, quý vị asking for trouble, tức là rất là lớn, rất là nguy hiểm, có thể là tán gia bại sản và có thể là wipe out toàn bộ cái hệ thống của quý vị. Và điều này đã thường xảy ra. Rất là nhiều người open một cái trade, mua một cổ phiếu, vô mua, đợi đến khi nào bán ra, đợi đến khi nào mà nó xuống thật là thấp rồi mới bán ra. Tại sao? Tại vì khi mà nó lên thật là cao cũng chưa bán quý vị. Tại vì mình không có exit strategy, mình không có plan trước. Mà nó nói rằng ok, tôi mua cái cổ phiếu đó 10 đô, khi mà nó lên 15 ngày sau tôi bán, hay là 7 ngày sau tôi bán, hay là khi nó hit 45 đồng tôi bán, hay là 35 đồng tôi bán, hay là tới một level mà nó nhấp 4 lần không được tôi ra. Phải có layout rất là rõ ràng, là khi thị trường nó lên tới đó, nó thử 3-4 lần không được thì tôi phải đi ra, chứ tôi không ngồi đó tôi đợi cho đến khi nào mà thử lần thứ 5, thứ 6 nhất quá tam nó đi xuống. Rồi lúc đó rồi tôi hỏi tại sao tôi không bán lúc đó. Cái exit strategy đó là một cái nghệ thuật, mà một nghệ thuật cao cấp. Cũng như là chúng ta đã từng thấy những cái cổ phiếu mình recommend quý vị. Tôi recommend UVXY 9 đô la lên 24 đô la exit, nó lên tới 23-24 đô la. Rồi có nhiều người hỏi tại sao mình có nên đợi nữa hay không, thì tôi cũng không biết trả lời làm sao. Rồi tôi nói nếu quý vị muốn đợi thì đợi, tôi không biết sao. Rồi thì đợi đến 55 cô không có thì nó quay đầu xuống, bây giờ xuống còn 13 đô, đúng không? Thì bây giờ tại sao mình 23 đô không bán, bây giờ xuống 13 đô thì lại ngồi đó mình tiếc. Thì tại sao? Tại vì đó thì là mình không có một cái exit strategy, mình không có một cái hệ thống để mà mình chuẩn bị mình đi ra, và điều đó là cái mất mát và thiệt thòi nhất.
NTV Fund là một tài khoản tổng hợp đầu tư cổ phiếu trên thị trường Hoa Kỳ do anh Nguyễn Thanh Vũ, giám đốc điều hành.
We're tired of supporting Apple. You know, we've got our customers. All we're doing is creating churn to go to somewhere else, and they come to us, and then the others all follow suit. Will that surprise anybody?
I mean, it's reasonable. I just don't know when, and I don't think you know when. You're not saying when.
I'm not saying it's going to happen. But I'm saying that is a risk.
I mean,
that people don't assign to the stock at all.
And you've said it before, and it's a rational thing to say. I wouldn't trade it today, buy or sell on that news, on that potential news.
It would surprise me if that happened, but the rationale is that it should.
Yeah.
Bryn, jump in.
Yeah, I think also from a pricing perspective, as Kevin was talking about, if you look technically at the chart, the first support is at 234, the 50 days around 209. And so I think as an investor, be patient here. But I think that this is 2025, we will continue to see a dislocation of prices between this monolith we all call the Mag 7. I mean, we saw it with Microsoft this year, which was definitely an underperformer relative to the Qs in the S&P and then relative to the other Mag 6 names. I think you're going to continue to see this. I think there's going to be companies within that group that I think will absolutely underperform the market. And so to me, when I look at, of those 7 names, I think the one name where you have the most clarity, the most line of sight, still goes back to NVIDIA, right? Because we know that Microsoft spent a ton of money. I don't think you're going to see big monetization with any of these companies this year, except continuing to be with NVIDIA, which continues to get cheaper as their earnings grow.
I want to stay in this area, but sort of turn the conversation wise to Alphabet. You trimmed that name too. Tell us why. There was a note out yesterday as well. Any of that play into your thinking? When did you trim?
Yeah, these were, well, I wasn't specific in terms of the moves I was going to make in January. This is just one of them. The position, frankly, just got too big. I kept buying it when it got crushed. I remember buying it around 140, then around 165, 170, and it just kept building up. I trimmed it once before for the same reason, but it's just right-sizing the position. So the other moves I've made are really just, they're still big core positions. I run a very concentrated book, but I just want to take some off the table on this. I'm not that concerned about them losing significant share
in search
in search specifically. And I do believe that with AI, they are right there with the others, and they just have an incredible balance sheet. They've also, if you take a look at Verily and some of the other, I don't want to say vanity projects, they've really cut back on the spending. So they're really focusing, as shareholders want them to do, on what their core businesses are.
Kevin, what are your thoughts on this one, on Alphabet?
So we don't own Google at the moment, but I do think that there's a potential for them to lose this monopoly on search.
Really?
And we all talk about it all the time, but just think about any one of us here on the desk, where I would never escape that ecosystem personally. I find myself at least 10 to 20% of the time bypassing Google and going right to ChatGPT.
Really?
What about you?
Jim?
Well, look, we had this discussion yesterday, and Josh was talking about things like Perplexity as a competitor. And my thought on this is very succinctly that if you want to compete in the AI world, it really is an arms race, and you better have the biggest bank account to do so. Google has that biggest bank account. This is one of those reasons that, I think it was a couple of weeks ago, there was a discussion about Reddit, of all things, getting into AI. And I didn't chuckle at it, but inside I was like, really? How are you going to go up against Alphabet? You don't have the money. Yes, there is some competition, unquestionably. However, I think this is about the amount of money that you can spend. At this valuation, I think more competition is priced into Alphabet's price than is likely to show up. That's an opinion. You don't own it. You own some of it. Josh trimmed it a couple of weeks ago. For me, look, we're all trimming it because it's done fabulously well. We're going to admit that.
Portfolio management, it's not fundamental.
So far, I haven't trimmed it, and because of that, it is my biggest position. It's my biggest tech position. At some point, I probably will trim it, but I think there is more catch-up for it to do. Could be wrong.
And I've used Perplexity. It's on my phone, as a matter of fact. I've used ChatGPT. I just find, the old friend, which I didn't find I was getting more from the others, frankly. So
look, and also don't forget YouTube. Don't forget Waymo. Don't forget a lot of moonshots that really could pay out there.
Waymo just doesn't make any money. It's unknown when they will.
They haven't even figured out advertising yet.
Yeah, but also bear in mind that their competitors are falling by the wayside, right? GM has given up on Cruise. Ford gave up on it a long time ago. It
doesn't matter. It's the fundamentals of the business. When you have Uber, you've got drivers. That's why I don't know why Uber's rushing into, driverless autonomous taxis, because drivers right now pay for the insurance. They pay for the maintenance. They pay for the repairs. Who's going to pay for that? Waymo, they pay for themselves. That's why they're unprofitable.
Oh, hang on on that one. I want to get to Bren. You bought some more Uber there, so jump in on this conversation, Bren.
Yeah, so I own Tesla. Obviously, I bought Uber. I started buying in the mid 70s. I bought some more down here in the low 60s. I just think that there's a narrative of this that had been happening at the end of last year, of this long Tesla, short Uber, because Tesla's going to come out with robo-taxis and Waymo's going to take over, and we're all going to get in these robot cars. I just think that's years off. I have a Tesla. They are not ready to have these driverless cars around town. And so I think there is a hedge fund positioning, CTA, algorithmic trading, doing this long Tesla, short Uber. And I think when earnings start to come out in Q1 for both Tesla and Uber, you're going to see that Uber not only is a free cash flow machine, but don't forget in February of 2024, they announced their $7 billion stock buyback, which they really are just in their early days of actually implementing. And so I just think for this reason, this is just a great name to own in the tech space. And this is what I did with partial part of, my Apple shares, or the Apple proceeds, is buy more Uber.
And Uber is kind of coming off some beaten up times, right? It's worst month since May of 2022. Weiss, jump back in there and continue your thought. I just wanted to make sure we got Bren's move on that.
I've actually been looking at Uber because I sold it at 68 when I sold it, and it kept going up. It is interesting, but again, nobody's been able to say to me that why going to robo-taxis is a good thing, given the cost structure that I mentioned. And that comes, by the way, from people that are or were critical people at Waymo. So I don't see it. I don't see where the margins will be. It's much better outsourcing all that to your driver than, and even frankly, if you have to pay W-2 wages and benefits to your driver, it's still cheaper than paying to support the car.
I mean, call me old school, but I want a person in the driver's seat. Just me.
It's
apparently.
great though. Have you done a Waymo in San
I'm
Fran?
way too afraid
It's
to do that.
fine. No, it's great.
Well, Bren, you also have another winner that you've been trimming, Palantir.
Yeah, that was a winner for sure. I mean, stocks go lower than they should probably ever go, and they also go higher than they should go. And so I didn't want to take the profits last year, so I just waited till a new year. But when I look at Palantir today, I trimmed half the position. Huge fan of what they're doing, but when I look at the financials, it's got about $81 billion market cap. And I think they'll do maybe $2.5 billion in revenues. So from a revenue to market cap, it's very expensive. I think it's one of the most expensive names. And so this is one of these names where I think long term, this company continues to get stronger and stronger. But I think there's a heck of a lot priced in right now. So, I always say you can't go broke taking profits. And so definitely wanted to book some gains on this early in the year.
I mean, up 400% in a year. Holy cow, what a run. And Kevin, because of that, you got called out of it.
Yeah, you can't lose money taking a profit, but I wish I would have sold it a little bit closer to where Bryn did. Yes, we had covered calls in our growth strategy, Courtney, and it got called away, and it just continues to run. Love the company, but amazing how far this thing's gone so quickly.
We were touching a little bit earlier on AI, and you were talking about Copilot. So I want to get back to that thought, and Jim, let you sort of pick it up there, because we kind of sidelined the conversation. But we're talking about AI. Are we set for a breather? I know we brought up NVIDIA. We're talking about having those sight lines, but are we running out of steam? I mean, look at some of these names that have just run so far.
Look, I think we're set for a transition. AI is for real. Okay. AI is for real, but, and sorry to just repeat myself, I think playing it this year in Microsoft is probably not the way to play it. The way to play it is to look for those companies in the non-tech corporate world that are using AI, that are implementing it. Could be insurance companies. I mean, certainly there's a lot of room there for risk management and calculation using AI. Could be any of a number of travel and leisure companies that figure out how to get the right experience to the right consumer. I mean, I can go on and on about this. Could be retail, getting the right product in the right size in front of the right customer. I think that's the way in 2025 that you're going to see monetization come from AI. But just sort of blindly throwing money at, for instance, the hyperscalers because they're spending hundreds of billions of dollars on Blackwell chips, I don't think that's the way to make it. Michael Semblis, the strategist at JP Morgan, really smart guy. He does very good analysis of the markets. His recent piece, it's called The Alchemists, goes through the fact that for the hyperscaler community, the big tech companies that are buying all these chips and building all these data centers, for them to achieve the same historical margins on the amount of capex that they've done in the last year and going forward, they would have to create 400 to 500 billion of new revenues per year. And this is with their revenues around 100 billion right now. I'm not saying that it can't happen. Courtney, there's a lot of breathless projections out there. You can choose any of a number of podcasts to listen to that will tell you these are realistic. But I will tell you that to quadruple your revenues when you're already at this size is pretty impressive, and I'm pretty dubious of it.
First of all, I'd say that may be the right number in the end on that analysis, but that's not the number that's going to drive the stocks. What's going to drive the stocks is the continued adoption and the return on those, which some companies are seeing. Now, AI, coincidentally, because we're talking about it, is the fastest adopted technology in the history of the world. Faster than the internet, the web, which was free. This people have to pay for. I'd also tell you that it has been around for a long time. For example, there's this one company we're looking at from one of our portfolio companies that has been doing AI transition for a decade and works with all the top PE firms in their portfolio companies. So a lot of companies already have this frame of reference, but what it is doing is absolutely mind-blowing, and it is adding tremendous efficiency to it. So all you have to do is go along the mile markers. You don't have to get to that number.
Let me make sure I understand what you're saying, or let me paraphrase this back to you. I'm not calling you out, but you're trimming Google, Alphabet. or have trimmed. You have trimmed Apple. I've trimmed Microsoft. Bryn's trimmed Apple. I don't hear anyone, please chime in here, correct me if I'm wrong, coming into the desk today and saying, let's go load up on the Mag 7. I don't hear any of us saying
hold
that.
on. On AI, I did add to Vertiv, which we were going to get to.
We're going to get there in a second.
Which benefits completely.
Okay, but I
Stocks
was
been
being
crushed.
specific about the Mag 7. I was specific
So
about
the Mag 7, because I've been fully invested in the Mag 7 with large core positions for over a year.
But my point is you're trimming, Bryn's trimming.
I'm trimming because it's done so well as portfolio management. I'm not trimming on fundamentals.
You're not hearing, that's fine. You're not hearing me. You're arguing with me just to argue with me. I'm saying nobody's coming on the desk today and saying I'm adding to the Mag 7.
Listen, I don't want to argue with you for the sake of arguing like you're trying to do. What I'm saying is there's a difference between trimming because of portfolio management and because of fundamentals.
We're talking different things and you're getting mad.
Fundamentals.
We're talking different things and you're getting mad. I don't want to do that.
I try to be very patient with you, knowing the opposite.
Bryn, I heard you try to speak up there. Obviously, we started this conversation with a lot of your moves. So weigh in on the Magnificent Seven. Loading up, trimming, where are you going? What should you be doing?
Well, two things. As I said earlier, I think you're going to see this distinct performance within these, let's say, 7 names this year. And I think, to Jim's point, I think he's spot on. I mean, I own Microsoft, but I think about it in the same way that Jim does. I'm staying with it right now because they do have this big business called Azure. And Satya and Amy on last quarter's call said that Azure sales and margins were actually going to go up in the back half of the year. So I'm gonna believe what they're saying. But I think if you're thinking today, hey, where's going to be my best return? And I'm going to buy these 7 names in an equal weight basket. I think there's better places to put your money. But I do think, though, that like Kevin has a growth strategy that sells, calls against growth names. We own JEPQ, which takes the Qs and sells calls. But of those 7 names, I'm still big fan of Tesla and Nvidia because I think for different reasons these names are going to do well this year. But I agree that especially with the Apple and the Microsoft, they're pretty rich here unless something meaningfully changes and they're able to actually grow revenues to sustain the multiple that the market's willing to pay today.
So let's talk about then where you're putting some of that money, that you're trimming some of these profits of some of these big names, and you're putting some to work in Robinhood, which has also been named a top pick at JP Morgan, upgraded to outperform at Wolf. What do you like there?
Yeah, well, I mean, I think we've all seen this company, grow up. I think we remember, the GameStop. Steve was quoted in the movie, right? I mean, Robinhood was not a company I would have bought 2 years ago, but they've really changed. And so I bought it last year, and just for some numbers, they come out with earnings on February 13th, and they're looking for revenue and earnings growth of 83 and 205%. And where I think they're at this intersection of this secular growth trend with, there's 75 to 80 trillion dollars that's going to get transferred from the baby boomers through the economy down to their kids and grandkids. And on top of that, if you look at Robinhood's monthly metrics, which they print, I think they're taking business from Coinbase, from their growing crypto, and they're taking market share from the traditional custodians. And then what I like about it also, if you go to their site, they spend a lot of time talking about opening a retirement account. They'll do a matching program, and they're doing much more investor education, and to me, less of the gamification that they were doing a few years ago. And so I think as a financial, as well as a tech company, as well as a crypto, this to me is at the intersection of all 3 of those, plus that secular tailwind of this big transfer of 75, 80 trillion down to this next generation of investors.
Kevin, you've got financials, you've got tech. You don't really have fintech. What do you make of this Robinhood idea and the fundamental strategy here that Bryn laid out? It makes a lot of sense to me.
It makes sense to me too. And in our growth strategy, we do have Robinhood, and I love the fact that they print these numbers. Okay. And I'll pile on to some of the things that Bryn just talked about. Their crypto volume in November was up 780% year over year. Now that's obvious because we've seen what's happened with Bitcoin. But their equity volume was up 147 billion. That's 178% year over year. They made an acquisition of Trade PMR, which is a custodial firm for RIAs. So if you follow Bryn's thesis and you follow the money, if these are the people that are going to inherit it, at some point they may want financial advice. And to be able to tack on this legitimate financial planning division, I think they're going where the puck is moving. They see the field, and this is a stock that you shouldn't ignore.
Well, this was a jam-packed beginning of the show. We got to take a break, get some air. Coming up, more community moves. Jim Lebenthal buying the dip in one of his key holdings. The trade, though, is next. You're going to have to hang on for it. Halftime, back in 2 minutes.
Care.com.
Welcome back to halftime. Shares of U.S. Steel falling as President Biden blocks the $14 billion sale of the company to Japan, Nippon Steel, on national security grounds. In the last hour, the two steel companies have issued a joint statement saying they will take all appropriate legal action to protect their rights. Jim, you're buying more Cleveland-Cliffs on this news this morning. Tell us why. Go through your thought process here.
Yeah, it's not just out of spite. I mean, I will point out that Cleveland-Cliffs made an offer about a year and a half ago for buying U.S. Steel at around $35 a share. They raised that to $54 a share. And here we are with U.S. Steel now at $30 a share. So certainly U.S. Steel could have done better, but that's beside the point. What has happened in that year and a half is that Cleveland-Cliffs has bought a different company, Stelco, and they've bought that company at a meaningful trough in steel pricing. Now, I don't know where steel pricing is going to go over the next months, 3 months, et cetera. But I do suspect that over the next year, particularly under this administration, which has protectionist policies, that we will see steel prices have bottomed, and that as they continue to go up, because they have started to go up, that you'll see a bigger Cleveland-Cliffs benefiting from it. And let me just do the math on this very quickly. 2 years ago, Cleveland-Cliffs did $23 billion in revenues. With Stelco, I think it's pretty easy that they can get to $25 billion in annual sales. May not be this year, maybe next year. $25 billion times the historical EBITDA multiple, 12%, gives you $3 billion in EBITDA. Their historical enterprise value multiple on that EBITDA is 7. That gives you a $21 billion enterprise value target over the next year or two. Subtract the debt, and the market cap on that basis is 4 times what the share price is today. Now, you can find risks to this. Maybe steel prices don't go up. Maybe we hit a recession. Any of a number of risks, but that's the analysis that I'm using to buy more of the shares today.
We're going to move on to a different move. Weiss, you are buying more Goldman Sachs here, so very different sector, but go through your thoughts.
Look, I thought the stock had great momentum, and I'm not a momentum player. I'm not ignorant to what's going on with stocks. But then, it just corrected with the rest of the market and stayed down there. I can assume under the belief, as Powell came out with a more hawkish stance, that, hey, our rate's going to stay high. We're not going to, you're not going to see basically a IPO, secondary cycle, et cetera. And I still think that's wrong. I mean, there's so much pent-up demand for companies to sell their shares, to exit part of it, to raise growth capital, that's going to happen whether rates are where they are, whether they tick up a few more bips, or whether they come down. I do believe that that not an insignificant portion of the increase of the rise in rates has been from exiting bond funds. You take a look at bond funds, and the five-star manager has put up an average of 3% over the last 5 years. So don't people get tired of saying, okay, I'm tired of the safety, when I see equity markets over that same 5-year period really creating substantial wealth for me. So you'll see that selling subside, and maybe, there is another option, there is a TINA, but overall, to me, going back to my original premise, you will see the underwriting cycle. Everybody's anxious to get out there, the companies, the bankers, and the investors. So that's why I bought it.
Okay, more ownership in Goldman Sachs and in Cleveland Cliffs. Let's go over and get the headlines from Bertha Coombs. Hi, Bertha.
Hey, Courtney. The FBI released previously undisclosed video of a suspect who planted pipe bombs outside the DNC and RNC in Washington, D.C. the night before the January 6th, 2021 riot at the U.S. Capitol. It's part of the agency's renewed effort to identify that suspect. The announcement comes just after congressional Republicans released a report complaining that the FBI had not yet made an ID. Supreme Court Justice Clarence Thomas will not be referred to the Attorney General over allegations that the justice may have violated ethics laws. The judiciary's policy-making body told Democratic senators who had called for an investigation into Thomas's acceptance of luxury trips that the justice agreed to follow the updated rules on reporting such trips and gifts. The court has yet to respond for comment. And in the UK, researchers uncovered hundreds of dinosaur tracks that date back to the Jurassic era in a quarry. Now, the tracks, which are about 160 million years old, were made by both herbivores and carnivores. Researchers say that raises some pretty interesting questions about how they interacted. Eat or be eaten? I don't know, Courtney.
I love that. I love finding dinosaur fossils and stuff. Just fascinates the pants off me. Thank you so much, Bertha. Well, up next, our calls of the day. We'll debate today's analyst activity on 4 committee stocks and see Weiss is trimming his position in one of those. Halftime, we'll be right back.
Jim.
Welcome back to Halftime. It's time for our calls of the day. Let's start with Netflix. Benchmark reiterates its sell rating. Weiss, you own it, and you're trimming your position on this one.
Yeah, again, this is one of the ones I was waiting for this year to do. And it's purely a portfolio, management call. I love the company. I love the fact they still have so much pricing power that they're doing more and more in sports, which will bring more subscribers there. And then they will raise prices. The ad model is going well. And their only competition, well, actually, they don't have any real competition. So that's why I like about the position. Stock has done very well, as we all know. Position just got way too big to be responsible. Still one of my largest positions, if not my largest.
Kevin?
Yeah, I mean, the analyst calls nonsensical to go from 555 to 720. It's silly. Third quarter revenues were up 15%. Net income was up 41%. They report January 21st. They're going to crush it again. WWE comes to Netflix Monday night, so get ready, Jim.
Oh, I'm so excited. I'm just kidding.
I can't wait to see Jim in one of those little bathing suits.
I show up as a masked crusader.
There you go.
I protect my anonymity.
You're going to have to need some kind of special name for
I have
all
a
of
feeling
that.
people will be able to tell it's you.
I'll give you that one.
Yeah.
But sports though, to be
Sports
serious,
in general. You had the Jake Paul, Mike Tyson experience. You had Monday Night Football, Christmas football.
Yeah.
They haven't really figured out how to completely monetize advertising. And when they do, this thing's going to be a juggernaut. And to Steve's point, you can charge us anything. We're not going to get rid of Netflix.
Yeah, that's probably true. Diamondback Energy upgraded to outperform from pure perform at Wolf. It's also named a 2025 pick. Price target at 190. Bryn, you own this one.
Yeah, I mean, Diamondback is one of the best of breeds in the energy space. It sold off along with the rest of the energy complex in the fourth quarter of last year. But I think you have great execution from the C-suite. You have capital discipline. They're in the right spots. And so I think in the energy space, this will continue to be somewhat of a darling of the energy companies that asset managers want to own.
Steve, in energy, what are you thinking about for this year? Such a loser previously.
What about energy?
I thought that, but I didn't say
it. Sorry, Steve, that was low-hanging fruit.
It's all right.
You would have taken it if the positions were reversed.
Here's the thing. Even if he says something funny, his delivery is so bad, you can't tell if he's talking about Cleveland Cliffs again or me. So here's about energy. I've not been an investor in energy, but I do keep coming back and looking at it. Constellation, with the nuclear deals, I do think I am a proponent of nuclear. It's much safer than it ever was. So I'm just trying to figure out where to go on it. Nat gas looks interesting, but they've already moved. So to me, commodities are just so hard, and they are the ultimate trading stocks. That I'd rather not, continue to trade them. If you look over any 10-year chart, particularly last 10 years, they're basically flat across the board. So you definitely have to trade them. I'm looking. I continue to look. I can't guarantee I'm going to do anything in it.
Brett, you have a thought there?
Yeah, I mean, I think where Steve's not wrong there. I think there's certain names. We really like the mineral rights spaces in both the public and the private markets, but you definitely have to pick your spots. I mean, I sold Devon last year, and that stock's been negative for 2 years. And so when you think about allocating capital, I think you really have to get company specific or stick to the private markets where I think the returns are more stable.
Okay. So TJX named an off-price winner at Wells Fargo. It feels like, Kevin, it's almost always one of those names that analysts are calling out in almost any kind of economic environment. Off-price seems to be in vogue. Do you agree with this call?
I mean, 100% I agree with TJ Maxx, both in strong economic times as well as a pullback. $4.4 billion, record free cash flow. Earnings per share were up 11%. Revenues were up 6% in the third quarter. Management guide higher for the year. The only thing I would disagree with about this call is I don't think the price is high enough. 115, the stock's 120. So if it's the fourth quarter that they're leaning into, maybe the price target should be a little bit higher. We love the name.
Yeah, fair enough. It almost always comes up as a winner. I feel like when the analysts are going through their calls, no matter what the economic environment. Dell is another one, top pick at Bernstein. Bryn, you're in this name. Obviously not one of these big core Magnificent Seven kind of tech names, but still, you've got ownership.
Yeah, I think what this name, like an oracle, is what's old is new again. And their infrastructure services group is really the key point, the key section of the company that's driving, double-digit returns. So keep an eye on that. I think it'll be another strong year for Dell as the infrastructure continues to get built out in the AI data centers.
It's interesting here that Bernstein sort of notes that they see the stock as attractive in the 110 to 115 range, which ascribes little to no AI premium. Well, up next, Mike Santoli joins us for his midday word. We are back right after this.
%50 off.
We're back on halftime. Senior markets commentator Mike Santoli joins us for his midday word, as he does every day. At this point, yesterday when I was here on the desk, stocks had taken a downturn. Now we're kind of just melting up higher. What's the action take today?
Trying it again, Court. Actually, from around current levels is when yesterday's decline happened. So 59.40-ish, 59.30. It's the 50-day moving average. I think the market's caught up a little bit in the kind of tactical games in the absence of really big economic data. Probably worth acknowledging we're due for some kind of a bounce. It's very rare to have the market down 5 days in a row, not to mention around the turn of a year. So all this stuff, market acting not the way it's supposed to, so to speak. So you had the makings of an oversold market underneath the surface because you have had really negative breath. ISM numbers are okay, yields are tame. So I feel like this is what the market's supposed to be doing right now. The question is it just a relief bounce? I think you could look at some of the cyclical sectors in the last few weeks and say market is at least clenched up against the possibility that higher bond yields and waning economic momentum might be an issue. But I wouldn't say it's really sounding a loud alarm yet.
A lot of news cycle focus on what's happening in Washington.
Yeah.
Is the market paying attention?
Absolutely paying attention. I feel like part of the December story was, okay, the path to whatever policy objectives the Wall Street was hoping for might not be quite as clear or quick. And the idea that you wouldn't have a speaker and the idea that the budget fight was a little tougher than you thought maybe is a slight overhang. So if you do get Speaker Johnson gets clear for the job again, and it's one less thing to worry about. So I don't think it's the main driver, but it's been one of the things that I think is giving pause to a lot of investors who otherwise felt like it was kind of clear sailing into this year.
All right, got it. Well, coming up next, your crypto playbook for 2025. We're hitting everything today for you. Bitcoin prices breaking records last year. The committee's strategy from here, that's coming up.
Download and bet today.
We're back. Bitcoin is starting the new year in the green, but still below its all-time high of about $100,000. Kevin, you own MicroStrategy, rallying today up more than 400% in the past year. Sticking with this one.
We are, and it's not for a use case thesis. I hear Steve talk about that quite a bit from the Bitcoin perspective, but this is a leverage play on Bitcoin. And if you believe that there's a limited supply and a strong demand, which we know that there's a strong demand, that this will continue to go higher. I will also say, without going into incredible detail, that you can write covered call premium on any of these names and bring in massive cash flow. So we've been taking advantage of that, not just as a shareholder of a stock that's on fire, but also as an income generator and a hedge. We have a little Coinbase and a little Robinhood as well. But this is a trade that I think will continue into 2025.
Wow. Britton, you're not in MicroStrategy, but you've got to play here.
Yeah, I think, I own IBIT. And so options came out on IBIT earlier in the year. So earlier this week, when it was at pretty much right here, 54.55, I sold the May 70 calls and collected close to $4 in premium. So definitely not as much as MicroStrategy, but a lot less volatility. So close to 7% yield and within 6 months. So I think it's a good strategy, as Bitcoin we know is volatile, to take advantage of that premium.
Waisek, I want to give you a quick final thought here on this.
Look, volatility is as is advertised. I still think the demand's there and that Trump's policies not least of which he owns a Bitcoin business or crypto business, you can believe that it's going to go higher if for no other reason.
I was wondering when someone was going to say that this is a call because of a very pro-crypto administration. At least that's the thought. Well, coming up, we will take you to trade school with this committee's investing resolutions for the year ahead. Halftime. We'll be right back. Welcome back. Well, as we kick off another year in the markets, we asked our committee for their investing resolutions. Weiss, we're going to start with you.
Yeah. Look, my resolution is to be able to discern trends earlier. So once they get too fleshed out, there's really nothing to do in them. Or it's more expensive. They could still continue. Then you just determine the duration. So that's really it. So I've been so focused on what I own this year and things that are related to what I own that I've missed some trends. And so that's what I'd like to be able to do. That's the resolution. Clearly, I was looking for something to say when Patty asked me something to say. But that's it.
Okay, Kevin, what's your trading or investing resolution?
I want to exercise prudent risk management in 2025. After 2 years of 20+% returns, it's very easy to get complacent. I remember in my early career, the first 7 years, believe it or not, we had positive years in the market.
Wow.
Thought I was a lot smarter than I turned out to be. But you want to make sure that you don't get complacent, you don't get lazy, focus on the data, focus on the numbers and the mathematics, don't get caught up in the emotion.
Yeah, last 2 years have been pretty big winners, even just in index funds. Bren, what's your resolution?
Yeah, we want to continue to help keep clients in their seats long enough to earn the returns of the asset classes they're invested in. And that really comes down to help continue to educate clients to avoid what we call that perishable news, those 1 to 2 day headlines that can have that unwitting effect of derailing a long-term portfolio.
Jim, You're pretty much happy where you are. No resolutions for you?
Yeah, I thought about maybe turning into a crypto trader, buying meme stocks, coming on the show wearing neon green jackets, that sort of thing.
Your WWE wrestling outfit?
Yeah, exactly. No, listen, I always like to participate in these things, but I thought about it, and the turning of the calendar year doesn't change who I am, doesn't change any of us. Of course, I want to get better. That's good. That was funny. Of course, I want to get better, and that's what Kevin, Bryn, Steve, you've just said. So, of course, I'm continually going to improve. I want to echo, though, what Bryn said, because I think it was very insightful, is to continue to educate clients, because the worst thing that can happen is when you get a market downturn, maybe it's a correction, maybe it's something worse, and clients sell at the worst time. If there's one thing I want to continue to do, it's to continue to educate clients that price does not dictate value.
I'm not allowed to invest. My resolution is to make more meals my kids will eat. Anyway, stick with us. Final trades coming up on halftime. We are back with final trades. Bren, kick us off.
Yeah, I'm going to stick with Uber. There's no real resistance until 72. And don't forget that Dara is one of the best CEOs in the business.
And we're sitting right now at a little above 64. Kevin.
Robinhood, we love the acquisition of Trade PMR. We're going to experience the largest generational wealth transfer ever. And the young people, their demographic, will be the beneficiaries.
Jim?
It's true that energy is cyclical, and through each cycle, ExxonMobil gets better and better. That's going to continue.
And Weiss.
Crypto, Bitcoin specifically, and more specifically, IBIT. I just think it retakes 100,000, goes to 125 as the next stop.
All right, we've got just a little bit left here, and I want to show you that the markets are higher here across the board. Consumer discretionary leading the way. Tesla, highest in consumer discretionary, reversing yesterday's move, higher by more than 4%, but still down about 8% for the week. That does it for halftime. The exchange starts now.
Thank you very much, Courtney, and welcome to The Exchange. I'm Kelly Evans. Here's what's ahead. The vote to elect a new House Speaker is currently underway, with the second slimmest margin in history for the party in control. If it fails, that will have big consequences for Capitol Hill, for business, and for the economy. We'll bring you the very latest tallies as we get them and game out these potential impacts. Plus, despite the D.C. drama, our market guest is bullish on the U.S. He's here with where he's seeing the biggest opportunities in the new year. But are the charts telling a different story? Our technician brings 3 of them that are making him worry. This is one of them. It's our mystery chart today. He joins us ahead with what he's watching and how he's trading it. Before all that, though, let's get to Dom Chu with finally, Dom, maybe a break in this losing streak.
Yeah, I mean, it's a 5-day streak for the S&P, a 5-day losing streak for the NASDAQ, Cali to that point, a 4-day for the Dow. We look poised to snap, but we've still got a few hours to go. But still, let's start with the broader S&P 500, which is currently at 59.29. It's up 60 points or 1%. That's right near the session highs, which are currently at 64 points to the upside. Even at the lows, we were only up 20, still an up day overall. The level a lot of traders are watching right now for at least the short term is 59.44 in the S&P. That represents that 50-day moving average or medium-term trend line for the markets. The Dow Industrial is up 245 points, 42,636. The NASDAQ Composite tech heavier trade for consumer discretionary and for technology up to 19,540. That's good for 260 points or a 1 1/3% gain there. One key industry group in focus moving to the opposite direction are beverage alcohol companies. And this is all tied to headlines coming out of the Biden administration, specifically the Surgeon General, who's calling for warning labels that are linking cancer risks to alcohol consumption. That is not the only driver of downside, but it's a big one from a headline perspective. Diageo down about 3.5%. Brown-Forman down about 1.5%. Same for Constellation, Anheuser-Busch InBev, Molson Coors. You kind of get the idea. So again, it's not the only driver, but it's a sentiment shift here for the beverage alcohol companies for sure. Keep an eye on that. And then one other place to keep an eye on is another headline out of the Biden administration, and that's the formal news today of the blockage of the deal for Japan's Nippon Steel to buy U.S. Steel. Those shares are down about 6% right now. That's just about what they've been pretty much all session long. But now with the administration formally coming to block this deal, the question becomes, what's next for U.S. Steel? Are there other potential suitors? Are there lawsuits that happen? We'll find all of that out in the coming weeks, Kel. I'll send things back over to you.
Indeed, Dom. For now, thanks very much, Dom Chu. The House is voting to elect a speaker for the new Congress, and the path for Mike Johnson to remain in the role is really narrow. Emily Wilkins is on Capitol Hill with the very latest to kick things off this hour. Emily, what should we expect?
Hey, Kelly. Well, as you can see, members are now in the middle of voting. I think they're right in the C's, so they still have a long way to go. They're calling member by member by member. And we had Congressman Tim Burchett tweet just a little bit ago that he expects this to go on for multiple rounds. So he's expecting Johnson to lose the first round. Burchett, though, he just voted for Mike Johnson, and we've seen a number of other holdouts go ahead and support him. Could be because just before this started, Mike Johnson seemed to respond to some of the concerns from some of the fiscal hawks in the conference. He tweeted that he would be creating a working group comprised of independent experts to work with DOGE and reduce government spending. Johnson also said that that working group will review existing audits of federal agencies, and Johnson pledged to have committees take aggressive reviews of agencies. Now, Johnson was optimistic heading into this vote, saying that he thinks he has enough support to win, but when asked how many rounds he'd be willing to go, Johnson said he is ready to go the distance. Johnson said that we have to get this job done and unify the conference, and I'm here for the long run. Now, it seems like Johnson has swayed at least a few Republicans. Victoria Spartz, who we thought could be a no, is now a yes. And just a reminder, if all members are here, only 2 Republicans vote for someone other than Johnson, he won't be able to win the speakership, and we can go on to a second ballot or a third or take a break and have more negotiations. At this point, we're also seeing a couple members who were holdouts not vote. Their name gets called. We saw this for Andy Biggs. We've seen this for Michael McLeod, and they don't say anything. And they will have a chance then at the very end of this roll call ballot. The clerk will go ahead and call the names of those who haven't voted. So we might not exactly know which way this goes until the very end, depending on what some of these folks who are holdouts and are not answering, how they ultimately decide to go.
Yep. Thomas Massey, of course, insisting that he'll be a no, reiterating that last night. And we'll see what happens. Emily, for now, thanks. Emily Wilkins will be monitoring the vote for us. My next guest says if there is no speaker, President-elect Trump's agenda and the economy are in jeopardy. The ripple effects, he said, could boggle the mind. For more, let's bring in Larry Lindsay. He's president and CEO of the Lindsay Group and was director of the National Economic Council under President George W. Bush. He's also a former Fed governor. And Larry, it's great to see you again and to also help explain the significance of a vote that is going to be very, very slim. So for you, it's only if he loses and if they can't figure this out, there could be immediate consequences. What are those?
Sure. Well, the first thing is if there is no speaker, there is no House of Representatives. The speaker swears in the House, no speaker, no swearing in. Now, on Monday, the House and the Senate are supposed to vote to certify the Electoral College vote. And if there is no House, the House can't certify the Electoral College vote. So President Trump will not be president. We will not have a president until, what will happen on January 20th is Chuck Grassley, who is President pro tem of the Senate. He's the longest serving Republican senator, majority senator. He's 92, will become president of the United States. But it's hard to see how the Trump agenda passes, how we get a budget deal, how we get a tax bill action of any sort. No, this is a big vote. I'm surprised the markets have ignored it, frankly. So this is a huge, huge event.
If they don't elect a speaker, by what date do you think Chuck Grassley becomes president, basically? On the 20th?
He becomes president on the 20th, right? So if they elect a speaker before the 20th and the House certifies the Electoral College vote, then Trump will be president. You know, I doubt we'll go that long, but it is possible that on Monday, which is when the Electoral College is supposed to be certified, it is not.
So if you were talking to Thomas Massey, to those who might have, philosophical holdouts with Mike Johnson, say he's making deals with the Democrats and so forth, I mean, what do you tell him?
Well, is he for the Trump agenda or not? It's very simple. He's voting against enacting the Trump agenda if he doesn't vote for the speaker.
Yeah. Again, there's going to be some back and forth, and people can, vote and then change their mind and see if pressure is exerted. I don't know. Maybe, Larry, the market is telling us they think Johnson's going to win. It's going to turn out to be a non-event. Ho-hum, everything's fine.
Well, I hope they're right. I think there's a good chance they will be right. Maybe not on the first ballot, but there's a good chance that Mike Johnson will be reelected as speaker, and then everything can proceed. But I'll tell you, we shouldn't be sweating this. This is a ridiculous situation to be in.
And is it ridiculous because of the margin or for other reasons?
I think it's not unusual for Washington. It's ridiculous because of the egos involved. I think when Mr. Musk pulled the rug out from under the speaker, it didn't help. They left him swinging in the wind for a week. They didn't realize they had a problem. And then the president finally woke up to the fact that he has a problem, has been lobbying hard ever since. But we'll see whether that works or not.
What do you make of the Trump-Musk partnership and the way in which Musk and Ramaswamy's goals may antagonize and divide and fracture the GOP when it has this very slim majority to begin with?
The thing is that is striking about both gentlemen. They are both very smart. I have enormous respect for both men. Right, Musk in particular is a visionary, but visionaries often don't understand how Washington works. Washington is not a visionary place; it's an implementing place. And when you try and mix the two, it doesn't happen. And I think that he has a lot of learning to do. I'm sympathetic to the criticisms of Washington, but you still got to play by Washington's rules. I don't care what you say.
With that in mind, Larry, and if you said, okay, well, their goal, or maybe you could argue part of the mandate Trump was elected with was, cut government spending, kind of get after the deficit, and so on and so forth. What's the best way to do that in the world of kind of real Washington politic?
Johnson.
Well, no one's invented one yet. That's why we're
I guess they did it in the 90s.
In debt.
Johnson.
Well, a little bit, and Reagan did some. I was there actually for Reagan's efforts. There was some pruning back. It's very hard. It's called the swamp for a reason, and all the animals in the swamp form an ecosystem and cooperate with one another. So we'll have to see. It's the ideal situation for a member is to give speeches back home about how he wants to bear the deficit and cut waste. But then again, have the waste that goes to his district still come through. And that's the unique problem. And they're all in the same way.
And so, Larry, when you look at the president's agenda and what you think is likely to actually happen, we have this big, like the dagger out there of the expiring tax cuts, the border, energy, so many of these different initiatives. They say maybe that's just going to be one big bill. I don't know. I mean, what are your expectations for the next 3, 6, 12 months?
Well, assuming Mr. Johnson is elected Speaker, the House will be able to function. They're going to have to start moving fast. They lose 2 Republican members who are going into the administration on January 20th, and they won't have special elections for those districts until April 1. So there's kind of a 2-month hiatus there where it's going to be hard for the Republicans to command a majority, and so nothing will move. They can still work in committee and things like that, but it's going to be things are going to be more delayed than what you'd expect. That's why the Rules Committee from the last Congress set up a set of rules that can fast track a bunch of legislation. And that may lead to votes before January 20th, so the president can claim that he got a lot of his agenda through early on. But the really big bills, dealing with how we're going to deal with the deficit, how we're going to deal with avoiding a huge tax increase in January 20th. That's what it is. I mean, everyone talks tax cuts. No. We've had the same tax rules for 8 years. If you end those tax rules, it's an increase in taxes in January 26. Big enough, frankly, to cause a recession in 2026. So there's a lot at stake here in getting things passed.
And then I guess my final question, although I wanted to quickly ask you about the Nippon Steel block as well, but the final question on this is, do you feel bullish or bearish then about the U.S. economy this year? Because you've been pretty optimistic. You've been saying inflation's going to remain higher than expected, but is there a shift in tone now?
Well, there will be if Johnson loses, right? I think that could really throw a monkey wrench in the works. But no, the U.S. economy is strong. I think the big surprise this year is going to be real wages. This is the natural part of the business cycle for labor to get its share back. Remember, real wages actually fell in the 4 years of President Biden. So it's time for them to claw it back. And the higher real wages are going to raise costs for business. If I were a market participant, I would be a little bit, it looks like they just approved it. That's why people are applauding.
We'll see. So, I'm holding my breath until they tell me anything officially.
Bullets dodged. Well, they wouldn't have the applause going on if they hadn't elected somebody. I think the members of the House are all relieved, no matter what.
Let me quickly then, Larry, sneak this in before we have to come back to the vote outcome. I mean, what do you think about blocking Nippon, an ally, a Japanese company, arguably better technology, maybe you say, from taking over U.S. Steel? Are you side with Biden and maybe with Trump on this one that it should be blocked, or would you let it go through?
Well, either we believe in a free trade, a generally free trade agenda with our allies, and Japan is one of our oldest allies, at least since they were our enemy, since 1945, one of our oldest allies. And not only that, it's good for U.S. Steel. This capital injection, the jobs are more secure. Frankly, this is just playing politics by the president, President Biden in this case. And Trump would have done the same thing, I think. They're just playing politics. It's a bad sign.
All right. I think they're just roll call. I think they roll called Johnson, which is why he got the applause, and they're only on the K's of the alphabet. So this could go into next hour.
Okay, nervous for a little longer then.
Yeah, exactly. Larry, thanks for joining us. Really good to check in with you on a number of fronts, and what's going to be a very interesting year.
Right, it sure will be.
Larry Lindsay with the Lindsay Group. You too. Thank you so much. Despite all the noise and DC drama, my next guest sees several areas of opportunity in the U.S. in stocks and in bonds. Let's bring in Daryl Cronk. He's the CIO for Wealth and Investment at Wells Fargo Investment Institute. Daryl, welcome to you. Maybe I'll start with bonds. It's been a terrible stretch for them the last several years.
It has, Kelly. You're right. I think if you look at the Bloomberg aggregate, we're up 1.4% for 2024 for just straight U.S. Treasuries. That's when we were up 5.5% going into basically the fourth quarter of the year. So we gave a lot of that back. December was a really ugly month. I think the third worst on record in the last 45 years for Treasury futures. So we repriced the yield curve considerably.
But you would be a buyer here?
We're starting to extend duration here. We've been crowded to the short side of the curve. We're starting to leg out. We don't think you have to run and do that all at once. I think the key in 2025 here is you need both the 10-year Treasury and the unemployment rate to both stay below 5%. If that can happen, you're going to get some good economic growth. We've put 3 quarters in a row now in the books with 3% U.S. GDP growth. That's far better than the rest of the world. And remember, earnings are priced in nominal terms, right? So if I'm getting, call it 2.5% to 3% inflation, and I'm getting 2.5% to 3% GDP growth, I'm at 5.5% nominal. That's a really healthy environment for earnings, and I think for stock prices into next year.
And that's kind of where you're going. And I like how you said that we want both unemployment and bond yields to stay below 5%.
That's right.
Stocks, by the way, then do what? I mean, coming off a couple of strong years.
Yeah, I mean, obviously it's well documented, 2 years in a row plus 20%. Hasn't happened since 1998, only the 5th time in history it's happened. We set 57 new record highs for the S&P last year. So the bar is high coming into this year. But remember, almost all of 2023 was done through multiple expansion and virtually no earnings growth. It looks like when we ink the fourth quarter earnings here, as we step off in earnings season, we'll have somewhere around 9% earnings growth for calendar year 2024, which is healthy. And then next year, we're at 275 on the S&P. That compares to where we'll finish the year for EPS at probably 243, 244.
Wow.
So that's a healthy 12, 13% growth. We don't think multiples can expand from here because multiples are already high on a historical and relative basis. But if you get 12, 13% earnings growth, prices can go up in line with earnings growth, even if multiples stay the same.
Sure, I think a lot of people would take it. You're hearing too this kind of argument. It's contrarian to kind of go international. With a lot of people saying, how can it get any better for the U.S.? I mean, continue to climb in terms of market cap. We know the challenges rest of world, but once everyone's on one side of the boat, maybe we should think about why. You see how hard it is for me to even ask the question, is it possible that international stocks could outperform? Because I don't see it, but that tells you that maybe it'll happen.
You're right. And it's the right question to ask. Look, I mean, it's been asked every year for the last 5 years running, and every year it's been a value trap, right? To try to go internationally minus a few select markets. I mean, with Germany basically in a recession, France on the cusp of it, China having their problems with stimulus, the strong dollar, I mean, people are underestimating. When you look at what the dollar has done just in the last 90 days, it's in the 93rd, 94th percentile of moves historically for a strong U.S. dollar. That is just really hard on international markets and on international earnings. Can that abate and the dollar can kind of level off here and even come down a little bit into next year? That would be helpful for international companies. But right now, between rates going higher and the dollar going higher, it's really putting pressure on emerging market and developed market equities.
It's ironic because it sometimes puts pressure on us as well. So it seems nobody benefits from that strength.
That's right.
You have, I know you can't really necessarily give us specific names, but in terms of kind of themes, you're sticking with where the innovation is coming from, where the new growth is coming from, Gen AI, industrial power. Can you get any more specific on that, especially for some of these trades that already feel quite crowded?
Yeah, I mean, look, 2 years in a row, the 3 best performing sectors have been tech, communication services, and discretionary, right? So obviously they're not cheap. we do think that trend continues, although our most favorable right now in our portfolio is energy. We think energy is cheap. You're getting a solid dividend. Oil prices are back on the move higher. We're about pushing up to the 50-day moving average, could break through that. We also like industrials and we also like financials. So I think the story for equities in 2025 is both delivery of that earnings growth, but also a widening of breadth, which has been extremely narrow the last 2 years. You've got the top 6 stocks making up 31% of the S&P, top 10 making up 40%. You've got to get financials, industrials, some of these other areas that haven't participated as strongly the last couple of years to really help take the lead in 2025.
All right, Daryl Kronk, thank you. Appreciate it, giving us the playbook for 2025. And coming up, the S&P 500 buyback index tracks the 100 stocks with the highest buyback ratios. Names like Apple. The group is actually underperforming the broader index since the start of last year. But one strategist says it'll be companies buying back stock, not investors, that drives the market in 25. He'll join us to make his case. But first, tensions with China are on the rise after Beijing targeted more than 24 companies with trade controls. We'll get a live report from Beijing and look at the impact to investors with the CraneShares CIO. That's next on The Exchange.
This is The Exchange on CNBC.
China is hitting more than 24 U.S. companies with new trade controls and adding 10 to an unreliable entities list that will prevent them from doing any business in China. Eunice Yoon is live in Beijing with those details. Boeing is among them, right, Eunice?
Yeah, that's right. Lockheed Martin, Raytheon, a lot of these units that these larger corporations have are now among the targets of the Chinese. So China is banning trade of dual-use items for 28 American defense contractors, and then 10 of these companies are on a blacklist for their sales of arms to Taiwan, which is an island that Beijing claims as its own. In addition to that, the Chinese are taking aim at the EV industry. The Commerce Ministry said that it's revising updating its export control guidelines to include technologies that are important for the production of EV batteries. So this includes lithium and gallium extraction and refining, and battery chemicals and processing, which influence the battery performance. So it's unclear, Kelly, just when these new revisions are going to come into force. However, the public commentary period ends on February 1st.
And Eunice, do we expect these to be expanded?
The way things are looking between the U.S. and China, probably so. Right now, most people think that this move is meant to counter the U.S.'s restrictions on Chinese tech development, as well as seen as people here think it's also aimed at the modernization of the Chinese military. And then on top of that, the Chinese have been indicating that they want to keep a grip on the EV industry as well as global supply chains.
Yeah.
And of course, we have President-elect Trump coming into power in the next couple of weeks.
Exactly right. Getting ahead of that as well. Eunice, thanks. We appreciate it tonight. Eunice Yoon in Beijing. Breaking news here on the House vote for Speaker. Emily Wilkins on Capitol Hill. Emily?
Hey, Kelly. So at this point, we do have those two Republicans who have now voted for a candidate other than Mike Johnson. We had Thomas Massie. Of course, we knew he wasn't going to vote for Johnson. He voted for Tom Emmer. And now we have Ralph Norman, one of the other holdouts who was undecided yesterday. He met with Johnson. He sounded optimistic, but said he wasn't there yet. He has now gone ahead and voted for Jim Jordan. We have another about 5 members, Republican members, who they were in the chamber. Their names were called, but they didn't say anything. And so what's going to happen then is that the clerk will be going back to their names when they are done. We'll see if they vote present, if they vote for someone else, if they vote for Johnson. Clearly, this is a strategy. We just don't exactly know at this point. And of course, there are still some other members who have been holdouts for Johnson, including Congressman Chip Roy. They haven't gotten to vote yet. Their names are further back in the alphabet. But at this point, it is looking like we are going to be going on to a second roll call vote. Of course, nothing is final until the gavel falls. Anyone can change their vote. But at this point, it does not looking good for Mike Johnson. And it's looking like those promises that he made before going into the chamber with having a working group to work with DOJ to cut spending might not be enough at this point. Kelly?
So if I heard you correctly there, you said it was Ralph Norman from South Carolina who was another no vote on this, bringing that to 2. Now, are they going to continue the roll call all the way through, Emily, and then start another round? How does it work?
Yeah, so they'll continue the roll call all the way through. I mean, technically, members can continue to change their votes until the gavel falls, so nothing is final. However, again, at this point, with kind of these 5 members, Republican holdouts who are just not voting and will vote then at the end, plus the 2 who have already come out and voted for someone other than Johnson, things aren't looking good. Johnson would need a small miracle for him to work out on the first roll call. After that, Johnson can decide whether to take a break, go back to his office, maybe meets with the holdouts, or he could decide to just go ahead into that second roll call vote and see how he does there. So we'll be paying very close attention to the rest of this roll call, to what the final roll call for the first one is, exactly how many folks are for or against Johnson, and then figure out what the next steps are from there.
Interestingly, the market completely shrugging it off, to Larry Lindsay's earlier point. The Dow's still up nearly 300 points without much movement on this. Emily, we appreciate it, and we'll check back in. Emily Wilkins with that update from Capitol Hill. Circling back to China, now those stocks have been under big pressure amid ongoing tensions with the U.S. and under its own economic struggles. My next guest says uncertainties about the Trump administration are keeping investors on the sidelines, despite some olive branches on both sides. CraneShares CIO Brendan Ahern is here. Brendan, welcome. I mean, how much is this about Trump, and how much is this about a debt deflation spiral for the Chinese economy?
Yeah, certainly investor enthusiasm just based on the incredible outperformance of U.S. stocks over the last 15 years. You have a very, very significant underweight to non-U.S. equities in general, but then at the same time, particularly to China. And I think that really is due to the concern, the career risk that a professional investor would have buying Chinese stocks with the threat of Trump tariffs. At the same time, we don't really think that campaign rhetoric will become an economic reality. We don't think replicating the tariffs that led to the Great Depression, the grapes of wrath, so to speak. We think this is the art of the deal, and we think the Trump administration will finalize a strong deal with China, who will go along with it.
I was reading through some of the measures that the Chinese are now trying to undertake to boost the economy. I don't understand the orthodox monetary policy one. Obviously, they've let the currency go a little bit today. They seem to be doing a lot of stimulus measures, even things like subsidizing iPhones, or I'm sorry, smartphones. Why? Maybe some of them are iPhones. Interesting.
Yeah, I think one of the things that happened overnight is we had the NDRC, one of the major government agencies in China, say that they would expand the consumption subsidies that we've seen toward home appliances and auto, including electric vehicles. See, they expanded to home electronics, including mobile phones. And we had a very strong rally overnight in Hong Kong from specific companies, really the Apple ecosystem, companies like AAC Optical, Sunny, as well as Xiaomi, a major player in mobile phones in China, competitor to the iPhone. But I'm really surprised that Apple's not rallying off of this news that you have the world's second largest economy is stimulating, and now you're seeing that geared to home electronics really should benefit not only Alibaba, but in particular JD.com. JD.com is really almost like the Best Buy of China online. So we think investors is just a little out of sight, out of mind for U.S. and global investors of some of the real positives happening in China literally today.
It's interesting you say that as well, because those are some of the individual names that David Tepper had doubled down on back when he was reducing his broad exposure to China a quarter or two ago, and kind of looking at maybe what he foresaw as some of the individual beneficiaries here. I also find it interesting, you've seen a few olive branches, you think. So while we were just talking to Eunice about some of these new kind of punitary measures, what do you see that gives you some optimism between the two sides here?
Well, a lot of the measures that you're seeing from the outgoing Biden administration has led Beijing to show that they have some levers they can pull. So you're seeing a little bit of this tit for tat going back and forth. To Eunice's point, this is all proposed, which means, again, this is a little bit of the door is still ajar. And at the same time, we see President Trump, he invited President Xi to the inauguration. We think that's unlikely that a big state visit takes months to plan. But I think it's a very strong signal to see Vice Premier Li or Liu He, the trade envoy, attend. At a bare minimum, the ambassador, we believe, will go. You've also seen within the continuing resolution, this big bill that got passed at year end, from version 1 to version 2, when President Trump and Elon Musk opined on the first version, they pulled out the outbound China restrictions, which really not many people noticed. But again, another significant olive branch from the Trump administration to Beijing. And then, of course, you've seen some of the TikTok news from President Trump. I mean, that there's more to that than just China.
Of course.
Obviously, one of his major donors. But again, we just don't think investors are noticing some of these positives happening. It's been a little frustrating for us over here at Crane Shares.
I can imagine, but even if there's positives happening between these two major economies, it doesn't address China's chronic structural issues. And those are so big now, I literally don't know how they can be fixed, especially if Xi Jinping reportedly said, what's the big deal about deflation?
Yeah, certainly China has to shake itself out of this debt deflationary spiral. And I think they're being very conservative with implementing some of the stimulus because they really don't know exactly what President Trump, what those policies will look like. But they really don't have any choice, Kelly. Their back is up against the wall. The terrible performance of the Shanghai and Shenzhen composite, particularly this week, is really a big thumbs down from investors in China saying, you got to do more. And for any politician, including President Xi, when you get that thumbs down from your own investors, from your own citizens, that's a bad sign. And so you're starting to see moves like this NDRC. We really do think the super tanker is starting to move. It's just moving very slowly.
All right, Brendan, appreciate checking in with you today. Been a rough stretch, as mentioned, for Chinese equities. Brendan Ahern of Crane Shares. Coming up, NVIDIA is the best performing Mag 7 name this week. What's old is new again. But investors are already looking to the next catalyst for growth. We could get some answers from CEO Jensen Huang's keynote address at the Consumer Electronics Show in Vegas next week. We will look ahead to that next.
free quote.
Welcome back to The Exchange. I'm Kate Rooney with your CNBC News Update. White House spokesperson John Kirby said earlier today the U.S. is expected to announce more security assistance for Ukraine within days. No additional details regarding the aid was provided, but it comes after the Biden administration announced last week $5.9 billion of military and financial assistance to Ukraine. Meanwhile, the family of Eric and Lyle Menendez will meet with the Los Angeles County District Attorney today in a bid to push for a reduced sentence for the brothers. The family-led coalition said over 20 family members will push for a resentencing process that reflects the brothers' demonstrated rehabilitation. The brothers are currently serving life in prison without parole for the murders of their parents that rocked the nation back in 1989. And the Biden administration issued final guidelines for hydrogen subsidies worth tens of billions of dollars over the next decade. The rules include a provision that allows companies to claim that credit to produce hydrogen in existing nuclear plants under certain conditions. However, some environmental groups oppose allowing nuclear reactors to qualify for clean hydrogen credits. Back over to you, Kel.
Very busy here in their waning days. Kate, thank you very much. Yeah. The Consumer Electronics Show, or CES, kicks off next week in Las Vegas, showcasing some of the biggest names and advances in technology. AI, a big focus this year. Deirdre Bosa tells us what to watch for, and we have a couple of important keynotes, perhaps, to hear from. Deirdre.
We do. One very exciting one to kick it off. Let me tell you about that in a moment. But let me just first say that in recent years, CES has lost a little bit of its shine and relevance. Contributing to that was COVID, the rise of cloud and enterprise software, gimmicky or incremental updates versus the groundbreaking innovation that characterized the early days of CES. This year, though, there is a big opportunity to revive its role in the age of AI, and the elements are already there. It needs to capitalize on it. NVIDIA CEO Jensen Huang, he's kicking it off on Monday with a keynote. He's also expected to announce a key GPU upgrade with the RTX 5000 series that's based on the new Blackwell architecture. Now, NVIDIA shares, they're up nearly 7% over the last session and a half in anticipation of that keynote. For the industry at large, though, the stakes are high. The pressure's on for actual use cases that go beyond the AI hype. Last year's high-profile AI releases, they were devices from Rabbit and Humane. Remember that pin? Ultimately, they underwhelmed and, well, flopped. AI PCs, they were everywhere too, but shipments dipped last year, and lackluster growth, that's expected for this year. Adding to urgency, AI's digestion phase, where the focus has moved from raw innovation to integration, optimization, and scaling. Investors are becoming increasingly wary of those ballooning costs, especially from the hyperscalers tied to bigger and better models. They're looking for ROI in applications. Kelly, CES could give us a taste, at least, of what we might expect or hope for this year.
Yeah, although, is there anyone beyond kind of the usual suspects? I remember when Ed Bastian sat with us a couple weeks ago, he said that their Delta is going to be giving one of the keynotes as well.
I know. It's like you have people like Delta's CEO going, you have Samsung, I believe, but they still miss some big players. I mean, Apple stopped going in an official capacity in the early 90s. It doesn't mean, though, that you're not going to see products and applications showcased on the iPhone or other Apple devices. I spoke to Google as well. They don't actually have a booth either, but they're sort of talking about their Google TV stuff. So it still has some ways to go, but all you need, Kelly, is that one killer AI app, right? Essentially to sort of get the wheels turning.
I suppose, and we'll see if investors' excitement pays off. Deirdre, thanks. Deirdre Bosa. Coming up, today's stock market rebound likely won't be enough to save the Santa Claus rally this year. And while our technician isn't calling for a bear market just yet, he does see some downside risk ahead for the rest of the month. He'll tell us why after this. Welcome back. We had a record year for stock buybacks in 2024, and we're already off to a strong start in 2025. And that's because corporate bond issuance is surging this month. My next guest expects that to lead to even more buybacks, which will keep driving stock market gains. Brian Reynolds is back with us. He's the chief market strategist at Reynolds Strategy. Brian, it's great to check in with you, especially in a year where there's a lot of concern about how we're trading at high valuations and, whatever's going to happen with kind of the fundamentals. How are you looking at this market and expecting this kind of pretty strong performance?
Well, Happy New Year. I think it's going to be a good year for stocks, but a volatile year. We're going to have a choppy earnings season coming up in a couple of weeks. We've got a lot of political drama on the table. We're going to have government shutdown battles. We're going to have debt ceiling battles. We're having a Speaker of the House battle right now as we speak. So that's going to add to some volatility. But the debt-fueled buybacks are so strong that over time, they will overcome that volatility.
And so that makes a lot of these sell-offs a buying opportunity. But you do note that we're one standard deviation above trend. If we get to 2, then you'd kind of want to be a seller.
Yes, the buyback announcements surged in November and December. We had almost $500 billion of new buyback announcements during that time. So over 2020-25, that money is going to get put to work. But if it pushes stocks up too high to 2 standard deviations above trend, I want to be a tactical seller. But you're also going to have volatility from the forces that I just mentioned. If stocks get pushed down to trend, I want to be an aggressive buyer from a tactical standpoint.
Is there anything, Brian, that would change kind of the corporate buyback strategy? I'm thinking more of like the expiring tax package that has to be renewed and things like that. Or are the conditions that have given rise to this phenomenon still largely in place? And do you expect companies to have the kind of capital to use to broadly do buybacks instead of a lot of the tech companies now, for instance, who have to use that for investing in AI?
These buybacks are driven by public pensions and insurance companies. Those are the biggest investors in the world. They are underfunded and they're too optimistic about yields. So they have to invest aggressively in the credit market. If something changes that, if there's a credit crisis, then we'll revise that. But I actually see things getting stronger. We kicked off this year with a great day after New Year's in the credit market, with insurance companies and automakers being able to access the credit market. And that tells me that the banks, after they report their earnings, they're going to access the credit market and leverage this economy up more. So the one thing I think could change things is to the opposite side. The Biden administration put in a buyback tax. If that gets repealed, then you're going to have more buybacks.
That's a great point. It's a tax that we barely even talk about. I know it was, not a huge amount, but still, if you want less of something, you tax it. We've still had this boom. If that goes away, I can only imagine. Brian, thanks for joining us. Kind of follow the dollars. We really appreciate it.
Thank you.
Brian Reynolds of Reynolds Strategy. And now let's get to the German word of the day, Dunkelflaute. Danke, Christina. It's having a big impact on European energy prices, with both Dutch and UK nat gas reaching its highest levels in more than a year. Pippa Stevens is here on set with this story. And is this all about the Ukraine pipeline shutdown, or is there something else going on?
Yeah, so that's part of it. But basically, the context here is that European natural gas did cross above 50 euros per megawatt hour for the first time since November of 2023, as the bloc draws down gas and storage at a faster than expected rate. There are 3 key reasons for that. The first is that it's been a colder start to winter, especially compared to last year, which was abnormally warm. The next is what's known as Dunkelflaute, which means cloudy days with low wind speeds. There's been a higher than usual number of days like that, meaning renewables are not performing at max capacity. Finally, a transit agreement that saw gas flow from Russia through Ukraine and into countries like Austria and Slovakia just expired. Now, Kepler estimates that by the end of the withdrawal season, inventory in European storage will be at 44%, down from 58.5% last year. That means they'll need to refill at a faster pace in order to meet the mandated 90% threshold by November 1. And that in turn could boost the U.S. LNG industry. The U.S. is already the largest LNG supplier in the world, supplying about half of Europe's LNG. And by some estimates, their imports will be up 18% year over year.
Wow, and they're building out more floating LNG import capacity. And so far, Germany's turned to Norway for a lot of its gas needs. I understand it. Maybe Australia and some of those other partners are filling the gap. So at what point do you think that brings energy prices, or gas prices in particular, down to where they were, in the good old days, 5, 6, 7 years ago, which could really help their economy?
I think we have to get through the winter, but this is becoming the common refrain. It feels like every single winter we go in and say, what are we going to get this year? And that's because particularly all of their grids are now interconnected. And so that means if you have this Dunkelflaute phenomenon in one area, it's plaguing multiple countries. And so it's not as if you can tap, your neighbor for exports. And because they have added so many renewables, when those are working really well, that's great. But then when they don't, you have to call upon that gas storage, and that's when prices start to accelerate. But already this year, we've drawn down 26 BCM. That compares to 14 BCM last year. And so we were already going in a weaker than expected spot. So right now, the price forecast really depends on the weather.
Quickly, although it's a big question, Germany, can they ever bring their nuclear capacity back online?
I mean, they have gone so far in shutting them down. Even after Russia invaded Ukraine, they really stuck behind that. And that was, of course, a major point behind Angela Merkel's mission. And so it seems like it would be tough at this point. I've heard some forecasts say that it would take at least a decade
to turn it back on.
Yes, that's what I've heard, just because they've been on the decline and they, weren't getting the regular maintenance and things like that because there was always this shutdown moment. Perhaps that can be turned around. We've seen things like that in moments of crisis before, but it doesn't seem like they're talking about that at this moment. As you noted, they've turned to LNG instead, building new import facilities.
From the U.S., bring it on. All right, works for me. Pippa, thanks. Pippa Stevens. Speaking of nat gas, don't miss our interview with EQT CEO Toby Rice next hour on Power Lunch. I will get more into the LNG boom that could be happening in this country, and it's coming up at 2 p.m. Eastern. And the so-called Santa Claus rally kind of failing to show up this year, with the S&P down about 0.5% since Christmas Eve. And while one technician isn't ready to wake the bears just yet, he is worried about some near-term downside ahead. We'll dig into what he's calling the market's three-body problem next. Welcome back. The market is suffering from what my next guest calls a three-body problem, thanks to a strong dollar, rising yields, and narrow breadth. And he says until those conditions reverse course, downside volatility for stocks will continue. Let's bring in Jonathan Krinsky, the chief market technician at BT. So it's like a physics thing, Jonathan. I thought it was like a psychological condition.
Well, it could be both, but as you mentioned, Kelly, we've had that persistent push up in the U.S. dollar, up 13 of the last 14 weeks. Interest rates at, in some cases, whether you're looking at real or nominal rates at the highest level in 2 years. And we had that persistent weakness in breadth in December. In some instances, it was some of the weakest breadth we've seen on record. So, it's really difficult for the market to make upside progress when all three of those are occurring, despite the fact that, some of the heavyweights, the typical heavyweights in the Mag 7 continue to, hold their own at this point.
Do we need the third, if it were just the dollar and yields, would that be enough to kind of be a problem in and of its own?
Well, it's kind of, I think the weak breadth is a reaction to the strength in dollar and yields, right? And because you're seeing it impact the small caps, you're seeing it impact the broad market the most, whereas the Mag 7 tends to be the least impacted by rising interest rates. We saw that, in 2023 and part of 2024. So, it's all correlated. It's all related to each other, and I think the hope for the bulls is that washout in breadth that we saw in December is an opportunity, and we can see breadth rebound. We're certainly seeing it today, but I think for that rally and the breadth broadening to have any sustainability, you really need to see rates and the dollar not only probably pause, but really pull back lower, and we just haven't seen any signs of that to this point.
Absolutely, and if Santa Claus should fail to call, bears may come to Broaden Wall. That makes me think of the late, great Art Cashin, and that gives you, among other conditions you're citing, some reason to think we might have some near-term downside.
Yeah, so that Santa Claus rally, it's often talked about. Today is actually the last day of the period, and barring a miraculous rally, it's probably going to be a negative Santa Claus rally period. Now, that doesn't necessarily mean, the rest of the year is going to be awful. There's been plenty of times when we've had a negative Santa Claus rally and the year has been actually pretty strong. But all else equal, a negative period does portend to lower than average returns as opposed to if the rally was positive. So you have that. The next indicator we're going to look at is the first 5 days of the year. So we're actually up, over the first 2 days. So that's a good start. So, it's always tough to make too many calls over the first couple of days of the year. But I think, over the last few months, the issue has been, really since the Fed began cutting its cutting rates, you've seen breadth actually narrow as opposed to what I think the consensus thought it would expand. So that's really the issue, and that's got to resolve itself for us to move materially higher.
Kind of on the flip side of this, because obviously big tech has been where the strength is, but again, a little bit of a different picture the last couple of days. Apple started out on a poor note yesterday. We had a guest earlier this hour who said he was surprised it didn't trade better today in response to some of the stimulus measures that China's introducing. And you think, after a really strong finish to the year, that where would you be looking maybe for an entry point if this correction continues?
Yeah, so it's funny. Apple we highlighted this in late December. It was almost too much of a good thing. It had been up 5 consecutive weeks, 2% or more each of those weeks, and that historically has been a pretty bad sign for the next month, meaning you just kind of pulled forward a lot of the strength, and you tend to see average returns actually in the -5 to 6% range over the next month. We've actually seen that just over the last week, so it's possible it kind of did a lot of the sell-off just in the last week or so. But I think Apple down around 225, 230 is probably better support. So it's been a decent pullback, but probably a little bit more to go as we head into the bulk of January.
242 as we speak, so we need yields down, dollar down, then maybe the rally can resume itself. It's trying today. Jonathan, thanks for your time. Appreciate it.
Thanks, Kelly.
Jonathan Krinsky of BTIG. Brian Sullivan is getting ready for Power Lunch. I will join him on the other side of this break. Stay with us.
Insurance.
And welcome to Power Lunch alongside the just seen Kelly Evans. I am Brian Sullivan, and we are watching the latest out of Washington as Congress tries to pick a new Speaker of the House. Overall, your money. Stocks rebounding on this Friday, but unless we see a bigger pop than we are now, it is not going to be enough to save the so-called Santa Claus rally. The upside? The S&P 500 is likely to break a 5-day losing streak.
Interestingly, not much of a reaction to what looks like a failed first round on that speaker vote. We'll have a whole lot more in just a moment on that. And two of the best sectors today, once again, energy and utilities. We'll talk a lot more about energy in just a moment. 1% gains here. Take a look at Vistra. It's the second best stock in the S&P last year, and it continued. It's up 7% today. Look at that one-year chart. It's quadrupled. It's up 16% year to date, and it's only the second trading day of the year.
And I'm noticing a trend on the show that I've been here 2 days, and we've done more
energy.
It's amazing how that works.
It's almost like we planned it.
Yeah, and also this, something you will not get anywhere else, even anywhere else on this fine network. And that is the winner of our annual Best City for the Stock Market competition. And this year, the winner is, well, it's surprising. We called it a deep tease for a reason. Here's a hint. Natera?
Oh, no.
What? Natera and Q2 Solutions are the two best performing stocks over the past year that are based in this city.
I still was dealing with a bill from them. If this is the same Natera that I'm thinking of, call me. We've got some stuff to work out.
Oh, they'll call you. And we'll get to all that ahead. But right now, we've actually got some breaking news on, let's call it, two big M's. That is Microsoft, and that is money. Steve Kovac on set with some breaking details on that and AI spending.
Yeah, this just came out from Microsoft about 2 minutes ago. Microsoft says it plans to spend about $80 billion in its fiscal year, which ends this June, to build out artificial intelligence. This announcement was actually tucked into a blog post from Microsoft President Brad Smith, who published it today coinciding with the start of the new Congress. He lays out some ideas in that blog post for the U.S. to lead in artificial intelligence. But back to the spending. This was not a surprise. Microsoft previously said to expect more than $20 billion in quarterly CapEx spending on artificial intelligence for the rest of the fiscal year. This is, though, the first time Microsoft is sharing a hard number on how much it plans to spend. To put these numbers in perspective here, Google says it spent $49 billion, Amazon spent $65 billion, and Meta has spent $31 billion in the 4 trailing quarters that we have data for. We'll get the December quarter numbers for all of those companies when they report earnings here in a few weeks. By the way, that $80 billion number is larger than Microsoft's biggest acquisition ever when it bought the video game company Activision for $69 billion. Also says over half of this CapEx is going to be spent here in the United States. Microsoft has previously said about half of the CapEx goes to compute. That means NVIDIA chips, so consider a lot of this money going straight to NVIDIA. To also some stuff like training for AI, server racks, other equipment. The rest is just the land, the power, construction costs, things like that. Despite all this spending, AI is still not a big business for Microsoft. The company says it's on track to generate $10 billion in AI-related sales this year. So if you're keeping score, that means you have Microsoft planning to spend $80 billion to generate $10 billion in AI sales. Still unclear how well products like Copilot are selling, and Microsoft has never disclosed sales figures for that, nor does it tell us much of how much AI spending is happening on its Azure cloud. It only says how much AI contributes to the growth of Azure. No whole numbers there yet. As we learned last year, investors have some real concern over when all this spending on AI CapEx is going to pay off. That's not just Microsoft. Those are the other big tech companies as well. CEO Satya Nadella and CFO Amy Hood have said they can dial back the spending if demand for AI slips, but for now, they just can't meet all the demand and the spending keeps going up.
There's a backstory here, which is, correct me if I'm wrong, Microsoft was the biggest acquirer of a lot of these NVIDIA chips.
Exactly.
Maybe twice.
That's what we think. We don't know for sure, but the Financial Times reported
that.
Yes.
And the stock has underperformed somewhat. Some of the other, big
Microsoft has, yes.
So do investors want them to be spending more at this point, or do they not? That's why I find the stock move or lack thereof kind of interesting.
Yeah, that's
a big number.
This is a huge number. Again, not unexpected. They kind of signaled this is where they're going, but now they're actually putting a hard number in here. And they've said the demand is there. They literally just don't have the capacity. OpenAI, the hottest AI startup, maybe the hottest startup period on the planet right now, relies on all this infrastructure Microsoft is building. So a lot of it is OpenAI. And by the way, Microsoft is taking on losses from OpenAI. It's going to start reporting those as well.
Do we know how they're going to make the money back? What they're going to have to charge somebody for something.
Well, Copilot is part of it. These Azure cloud services are another part of it. But again, we just don't have a clear view on how well they're spending. Microsoft has given some anecdotal, this company bought this many seats, this company bought that many seats, but it's really vague and nebulous. It's really hard to tell how well that's spending. They also made a big buzzy hire, Mustafa Suleyman, who is now the head of artificial intelligence. He has a CEO title at Microsoft. His job is to get MSN and some of these Bing and some of these legacy products juiced up and selling more with AI, and also creating that consumer version of Copilot. But again, he depends so much on OpenAI, all those large language models that they make, that eventually makes its way into Microsoft. So that's the real challenge here. It's they're almost like the product development shop. But look, it's going to be a long time. I will point out, Satya Nadella got criticized for this early in his tenure as CEO, spending so much to build out their cloud infrastructure for what is a huge business today.
True.
That bet paid off, and that's what he's betting on will happen this time.
Makes it clear they're doubling down on this direction.
100%. Let me guess, though. Get everybody addicted when it's free.
Yeah, of course. Like
and
Uber.
then, or cheap.
And then it's $100 and you can never get one. Yeah. Little
You got something you want to tell
from
us?
that still. Thanks. Steve Kovac. Let's shift gears now to some big moves in energy, with oil prices up 5% this week to nearly a 2-month high. Energy did underperform, by 20 points by 20 points last year for the S&P. It was only up 2%. But our next guest says this will be a better setup. Neil Mehta is an energy analyst at Goldman, joining us ahead of their big conference next week in South Florida. And Neil, I didn't realize it was quite that bad not bad, but it just kind of treaded water. And this was after a couple of strong years. So you think 2025 is going to be strong again?
Yeah, energy cycles tend to last a decade. And we've gone the last 50 years with 2 down cycles and 2 up cycles. We still believe we're at the beginning of a structural upcycle. It began in 2021. We think it'll last the better part of the decade. But with any upcycle, there are periods of pause. 22 and 23 were 2 years of that pause. 24 does feel like it's set up better for a variety of reasons. First of all, the secular element around power demand and the growth that should drive in energy demand, including for natural gas. Second, the valuations look compelling here. We've seen the XLE having pulled back from 97 as its local high post-election to closer to 87, 88 right now, having seen the trough at 83. Our implied valuations would say that should be closer to 100 at fair value. And then ultimately, we still believe that the sector has attractive return of capital opportunities. And in the past, capital stewardship was a problem in terms of how these companies allocated capital. But one of the things that we think we're going to hear next week when we have 850 people converge here down in Florida to talk about energy is that these are much better run companies which have a much higher probability in the future of earning returns in excess of their cost of capital.
Well, it should be 851, Neil. So we go every year to your Energy Clean Tech Utilities Conference. Look for not this year, but look forward to going next year. We do have some guests on for the conference, including you now, so do appreciate that. You're making a compelling case for energy. So why has energy as an investment, what's the technical term, stunk? It's underperformed the asset. When all we do is talk about how much power Microsoft and NVIDIA and everybody else is going to need to power all these AI dreams, which is powering the stock market, and yet that power is not, Constellation, Vista, and some others are, but for the most part, it's not generating returns that our audience want.
Yeah, it doesn't feel like a conference without you there, Brian, and I think you've made a great point in that we need to bifurcate the performance of last year. Those related to power in that power ecosystem have done tremendously well, whether those are the independent power producers, many of the regulated utilities, companies in the uranium complex, the nuclear complex, the specialty contractors like the MasTechs and the Quantas of the world. That AI-related power demand basket has performed well, and we think will continue to perform well. What has been left behind is oil. And a lot of that has to do with the fact that there's so much spare capacity in the system. Right now, Saudi is producing 9 million barrels a day. They have the capacity to produce closer to 11. So that in itself is 2 million barrels a day, or 2 years worth of oil demand. And so it's made it harder for people to get excited about the oil side of the equation and the oil complex. That said, I do think that there is going to be a period of time in the investable future where non-OPEC supply is going to be in deficit relative to global oil demand growth. And that looks like it's a 27, 28, 29 story. An oil market is on the precipice. We've just got to work through these 2 years of large projects coming into the equation.
Yeah.
One of the challenges has really been shale and how resilient U.S. supply has been. As Brian, you've written and talked a lot about that. We do see shale maturity on the horizon. I think that's going to be a theme that should propel a better setup for energy as we think about the 5-year horizon.
Neil, I was just going to pile onto that and say, I care about oil when gas prices are high in this country, but nat gas is what it's all about now. In the age of electrification, with the needs that Europe has, the fact that we might now be filling that gap, we're the biggest exporter. They have 5 plants coming online. Dan Jurgens says the size of this boom could rival even the impact of the AI chip boom. This is a huge deal for the U.S. So I don't really care about oil anymore.
The place that is very dynamic as we think about the natural resources ecosystem is power. Right now, the demand in the United States is 4.1 trillion kilowatt hours of electricity on an annual basis. That has basically been unchanged for 15 years. If we compound at 2.7%, which is our annual growth expectation, we'll be over 5 trillion kilowatt hours of demand by early next decade. The challenge is our grid is 50 years old, and we need to invest a lot more. So I would look over the next 5 years for utility capital spend to be up 40%.
Wow.
Versus the last 5 years. So there's a tremendous amount of capital that needs to be deployed to get our grid up to speed. Part of the reason we like companies like Quanta Services and small caps like MYR Group, but we have a constructive view on the utilities complex. Utilities are not boring. Utilities are actually one of the most interesting complexes in the broader market.
Totally. Neil, it's great to check in with you today. Appreciate your time.
Great to see you both.
We'll look for many more headlines next week. Neil Mehta with Goldman Sachs.
And look forward to being back next year. All right, so let's talk more now about energy, gas, and America overall. Now, natural gas prices, they've been soaring lately. Europe facing big problems. We've also got here a huge polar vortex coming. As much of America, maybe this means you, is going to get really, really cold very soon. And both of those things are popping natural gas and energy costs. And you just heard Neil Mehta highlight some of these names, maybe the EQTs of the world. Now, EQT, that stock has also popped. It is not only up this week, it is trading at levels not seen in more than 2 years. Toby Rice is the president and CEO of EQT, who'll be down there, I think, in much warmer Miami. Toby, it's great to have you on. Now, I want to bear with me for 1 second. You're originally from Boston, and I bring that up because right now, in the New England area, we are seeing about 75% of all electricity production right now coming from natural gas, nuclear, or imported energy, which is mostly natural gas. Only about 7% of all power, electricity right now, is being generated by wind, and a couple of percent is being created by trash or burning trees.
Yikes.
Burning trees and trash to make energy. We've talked about this before, Toby. We have a new administration. Do you think that 2025 and beyond will be the year we finally get more pipelines built in the United States so we can stop burning trees to make electricity?
Yeah, Sully, what you just mentioned is something that everybody's been looking at, the energy systems that have been developed over the last 5-10 years. In this, era of renewables, and they're scratching their heads. Why are we burning trash in New England to generate our power when we are sitting next to the biggest gas field in the world, less than a couple hundred miles away? Why are people in New England paying 6 times for their energy needs when they could use natural gas to heat their homes? Why are we producing record amounts of energy in this country? Think of this. Over 30 million barrels a day are currently being produced right now. We've never produced more energy than we are right now. But American energy bills are up over 30%. Scratching your head, it's because political force has overwhelmed market forces when it comes to energy. And a lot of these bizarre things have been allowed to occur. But we're very incredibly excited about the setup because we believe political force will take a backseat to market forces, which will let the cheapest, most reliable, cleanest energy make its way to the marketplace. We've got more of it than anybody else in the world. The question is, can we get it to the consumer?
Toby, it's great to see you again. So as I've kind of gamed this all out, I think, okay, we're going to be exporting a ton of fuel. If prices go up here at all, and to your point, bills are already higher, the public's going to think it's because we're sending LNG to Europe and what have you. So how quickly can we build pipelines in backyards where no one wants them to be built and try to resolve some of these internal problems so that the price can come down even as we're exporting substantially?
I think it's incredibly important for the American public to understand that LNG exports does not have a correlation to rising energy prices for Americans. You don't believe me? You can look at the history since 2016 when America began exporting LNG. Over the next 8 years, becoming the world's leading LNG exporter, and we've kept prices low. The real issue that's driving energy prices higher is the bottlenecks that have been created in between the supply and the consumer. And that's where we come back to letting market forces work. We need to get permanent reform so that the market can work. And then what we're really excited about, if we really want to dig into this and move into the era of the reliables, letting more reliable energy systems come into play, incentivizing the reliability of our energy systems that we create. That means more storage to stockpile fuel, more industrial capacity to meet our needs. The era of reliability is upon us now, and it's absolutely critical that we grab this.
There are people at home rightfully watching, and what they're saying is, well, Brian, we care about the climate, and we care about climate change, and we want to reduce emissions that would mitigate climate change. And I totally understand and support that. And the point of, I think, our discussion, Toby, is that importing natural gas via giant carbon spewing ship, a lot of it from Trinidad and other places, burning trees, burning trash, that is not the way to not only accomplish not our energy goals, but our climate goals, is it not? And so if we're going to keep using this level of electricity, or even higher, as all the stuff we've talked about with AI goes, we're going to need to find it from somewhere. And it's just weird to me that we'd rather bring it in on a ship from the Caribbean than pipe it in from Pennsylvania.
Yeah, Sully, the good news is people are getting smarter about energy. I mean, let's be honest. We've been too good at our jobs. Energy has been too reliable. It's been too affordable. And people have naturally taken what we do for granted. But unfortunately, you see the energy crisis that Europe is going through right now. What a wake-up call for the world. You see Americans' energy bills going up 30% despite historic amounts of production here. People are starting to ask questions, and that they're going to start asking and looking about energy from a holistic perspective. And that means, they're going to start embracing the reliable energy systems that we have. Climate is a really important thing. And what's really ironic about the climate movement with natural gas is people have been blocking pipelines because of their concern for the environment. But natural gas replacing coal is the biggest decarbonizing force on the planet. And ironically, people should be supporting natural gas pipelines because of their concerns for climate. That's the reality. And in time, we will continue to see more and more Americans and leaders understand this and begin to support clean energy in the forms of natural gas.
Toby, talk a little bit about the stock performance, up 25% the past 3 months, a little bit more muted if you take the longer view. And we have so much supply coming online that I do wonder, I mean, fortunately for us, it should keep the nat gas price capped. But what does that mean for your company? And what are your plans, either investment-wise or like profit-wise? How do you plan on benefiting from this potential boom?
Yeah, let's talk about the supply here, because I think your prior guest made a really great point. Shale and the exploration phase of shale has unleashed and made America energy independent. That's bringing a tremendous amount of peace and prosperity to Americans. But shale has matured. And now we believe that the cost of supply in U.S. for natural gas is around $3.50. That's the price that operators, the marginal producer, needs to break even. But breaking even is not the name of the game. We need to generate some return. And we think the marginal producer needs another $1 on top of that price. Wow. So the cost of returns is about $4.50. And that just speaks to the maturing of the base here. But put this in perspective, $4.50, that's the energy equivalent of $27 oil. Okay. I mean, it's still the most cost-effective form of energy that we have. But supply is one thing. Look at the demand equations, whether that's continuing to lower global emissions by replacing coal, meeting this AI power boom that's taking place, or meeting our LNG export needs, we are looking at a 20 to 40% increase in the demand for this product.
Absolutely. And it's heroic work that you're doing really for the world. But if I were an investor, I'd say, well, why is everybody bringing all this supply online at $350 when you're telling me I need $450 to be profitable or higher?
That's a great point. And I think the question really is going to be, we are coming up, I'd say, on maturing a lot of part of the basins now. One of the things that's really taken place in the last few years has been Appalachia, which is the source of the lowest cost of energy production in the country. This is where we operate. It's one of the reasons why EQT is the lowest cost one of the lowest cost operators in the country. Those low cost energy sources have been walled off from meeting demand because of this anti-pipeline movement. And so what that means is the marginal producer that can meet this demand has moved down to the higher cost regions like the Haynesville, which are going to be experiencing higher cost of supplies.
Well, right now, natural gas keeping the lights and the heat on. And given where things are going the next couple of days, I'm glad the heat's working. Toby Rice, president and CEO of EQT, 75 in Miami. So we'll miss you guys down there. Toby, thank you.
Enjoy. He's a Boston guy.
Thanks,
he knows how
he
bad
knows.
it's going to be. Coming up, we are awaiting the clerk to officially announce the results of the first roll call to elect a new Speaker of the House. We've had at least 3 defections, so we'll bring you those details when we get them. And before we go, take a look at shares of Getty Images and Shutterstock. Both are publicly traded. They're the 2 providers of stock images, and they're reportedly exploring a merger that has Getty shares up 29% and Shutterstock almost 10%. We'll be right back.
Tiếp trao đổi. Với chỉ tiêu 30% tiền lời mỗi năm, quý vị sẽ được chia tiền lời mỗi 3 tháng với số vốn đầu tư tối thiểu 5.000 Mỹ Kim. Quý vị sẽ được công ty bảo đảm 100% không bị mất vốn và có thể rút vốn về bất cứ lúc nào. Xin liên lạc trực tiếp với Trish Thùy Linh tại 949 524 9352 hoặc gọi về công ty 714 251 6036 để tham khảo.
Đó là một chủ đề lâu đời như bản chất của đồng tiền, cuộc đấu tranh không ngừng giữa những người giàu có và những người nghèo khó. Cuộc xung đột này trở nên đặc biệt rõ ràng và nổi bật sau cuộc khủng hoảng tài chính lớn. Mọi người mất tiền nhanh chóng như nấm mọc sau mưa thị trường. Hàng triệu người đã mất việc làm và cả nhà cửa của họ. Niềm tin vào phố Wall đã chạm đáy, thấp nhất từ trước đến nay trong ký ức của nhiều người. Mọi người được set xuống đường biểu Pearl khắp nơi. Giữa bối cảnh khủng hoảng này, một công ty đã ra mắt một ứng dụng giấy chứng khoán mới, Robinhood, được đặt theo tên của nhân vật truyện cổ tích Anh. Người lấy của người giàu chia cho người nghèo.
Kiếm sĩ giỏi, cung thủ giỏi, chiến binh giỏi. Bạn có đồng ý với tôi không?
Nhưng họ không khởi nghiệp công ty trị giá 5,6 tỷ đô la. Những người này đã làm. Đây là mức định giá sốc cho công ty tài chính với số liệu mơ hồ và nhiều đối thủ. Công ty trẻ này cũng có sai lầm.
Quá tốt để có thể là sự thật.
Vâng, đối với Robinhood, điều có thể đúng. Chúng tôi biết rằng hoạt động này scam.
Bị chỉ trích không chỉ từ các cơ quan quản lý mà còn từ những người bảo vệ quyền lợi người tiêu dùng.
Họ nói rằng họ được truyền cảm hứng từ
cuộc khủng hoảng tài chính và tất cả những thứ đó. Vâng, đoán xem. Họ đã nhận được một phần lớn
doanh thu từ giao dịch tần suất cao, gây ra câu hỏi liệu họ có thể xử lý được giờ vàng hay không. Nhưng hãy quay lại thời điểm ban đầu. Robinhood ngày nay, ứng dụng này được sáng lập bởi 2 người đã chán ngán với cách giao dịch hiện tại, hoặc ít nhất là họ biết những người khác cũng chán ngán.
Chúng tôi tập trung vào việc xây dựng trải nghiệm người dùng tuyệt vời. Việc đưa một thứ gì đó như 150 không khách hàng vào trong một thời gian ngắn như vậy là điều chưa từng có trong ngành môi giới.
Chi phí giao dịch đã giảm đáng kể trong 20 năm qua, kể từ khi giao dịch trực tuyến bắt đầu. Tại sao không miễn phí ngay bây giờ? Nếu bạn muốn đầu tư vào thị trường chứng khoán mà không phải trả phí, có một ứng dụng dành cho bạn.
Kể từ khi Robinhood xuất hiện trên cửa hàng ứng dụng, chúng tôi đã giúp khách hàng tiết kiệm được hơn 5 triệu đô la.
Hoa hồng, tất cả đều nhằm mục đích ép các ngân hàng phải trả.
Sứ mệnh của Robinhood là dân chủ hóa hệ thống tài chính của Hoa Kỳ.
Nhưng có một điều khác khiến sản phẩm này hoạt động. Chúng tôi đã nghiện điện thoại của mình. Robinhood giúp giao dịch dễ dàng.
All right, welcome back. The process of voting for the Speaker of the House is underway right now. Let's get right back to Emily Wilkins in Washington with more on exactly where this vote stands. Emily.
Hey, Brian, well, they were done with the first roll call vote. However, the vote has not gavelled down yet. So the first roll call vote is still technically ongoing, even though they've already called all the names and everyone has voted. The end of that vote saw that there were 3 Republicans who voted for someone other than Johnson. Thomas Massey, who wasn't a surprise, he voted for Tom Ever. Keith Self, he voted for Byron Donalds. And then Ralph Norman voted for Jim Jordan. So interesting to see that none of those 3 were actually voting for the same member. There doesn't necessarily seem to be a concentrated effort to get someone else in. Meanwhile, you did see a number of other holdouts, including Chip Roy, Tim Burchett, go ahead and vote for Johnson. So the last thing we saw, we're keeping an eye on the House floor. You saw Mike Johnson, a couple of his allies, and then Ralph Norman and Keith Self leave the House floor, go into a cloakroom where they can probably continue this discussion. Now, technically, they could come out of there and Ralph Norman and Keith Self could say, hey, we'd like to change our votes. We'd like to vote for Johnson, and Johnson would go ahead and lock it down. You could also see them come out and ask for a motion to adjourn. Then there'd need to be a vote on that. That could give Johnson some more time to figure out a path forward. Or they could come out and head right into a second roll call vote. It'll be up kind of to Mike Johnson to figure out exactly which direction he wants to go in. But you did see a surge of support from Johnson just about an hour or so ago. Johnson tweeted out a plan that was really meant to make sure that some of the fiscal hawks who were concerned about him were having their concerns heard, and he was trying to address them. So he put forward a multi-point plan. This includes an independent working group made of folks who would want to cut government spending, and they'll be working with DOJ as well as Congress to find places to cut. He also said that that group would review the audits of numerous agencies, also looking to find areas to cut or areas to improve upon. And then he also said that he was going to be pressuring lawmakers and his committee chairs to aggressively review the agencies that they have oversight of. So putting that plan forward, getting a couple lawmakers who are on the fence to a yes. But at this point, we are still waiting to see exactly what the final outcome here is going to be. If we are going to be moving on to a second roll call vote, or if there's going to be some successful arm twisting.
We'll find out. Emily Wilkins in D.C., let us know. Thank you.
And ahead on the show, the Surgeon General issuing a new warning on alcoholic beverages. Stocks are moving. We'll get the details when Power Lunch returns.
Sự kết hợp tăng trưởng đáng kinh ngạc. Công ty ra mắt vào năm 2013. Chỉ hơn một năm sau, họ đã có hàng trăm nghìn người trong danh sách chờ. Đi vào tháng 2018, họ có 3 triệu khách hàng. Đến cuối năm đó, họ đã tăng gấp đôi con số đó lên 6 triệu người dùng. Được nhiều người tin rằng là công ty được yêu thích trong lĩnh vực công nghệ tài chính. Đây là một công ty mang tính cách mạng.
Điểm thực sự mang tính đột phá của họ là tốc độ di chuyển và mức độ họ đang đẩy mạnh ranh giới. Bạn biết đấy, họ không thể bị loại bỏ vì có điều gì đó trong khả năng tăng gấp đôi liên tục. Khi rõ ràng bạn đang tạo được tiếng vang với người tiêu dùng, và sau đó là tốc độ họ cung cấp các loại khả năng mới. Tôi không nghĩ bất kỳ người đương nhiệm nào
có thể di chuyển nhanh như vậy, nhưng vẫn còn câu hỏi về số tiền thực sự có trong các tài khoản.
Robinhood nhận được nhiều sự chú ý vì sự tăng trưởng của tài khoản thực sự ấn tượng, và mọi thứ tương tự như vậy, nhưng có rất ít tiền ở đó. Với Swap và Merit Trade, chúng tôi có các tài khoản lớn hơn, các tài khoản lên tới hàng trăm nghìn, không phải trung bình, vài nghìn. Đó là lần cuối chúng tôi xem xét Robinhood.
Phân tích của JMP ước tính tài sản trung bình trong các tài khoản Robinhood là từ 1 đến 5 đô la không. So với 100 không đối với Fidelity, 110 không đối với TD Ameritrade và khoảng 240 không đối với Charles Schwab. Robinhood sẽ không tiết lộ giá trị tài khoản khi được CNBC hỏi.
Chúng tôi không biết chính xác quy mô tài khoản ở đâu. Tôi nghi ngờ rằng dựa trên các loại tài khoản, chúng thường là các tài khoản có tài sản thấp hơn, và do đó chúng sẽ ít có lợi nhuận hơn vào thời điểm hiện tại. Nhưng tôi nghĩ có lẽ một trong những điều quan trọng cần nghĩ đến là một tài khoản nhỏ hiện tại có thể là một tài khoản lớn trong tương lai. Đặc biệt là nếu bạn đang tiếp cận khách hàng khi họ còn trẻ hoặc mới bắt đầu cuộc sống tài chính.
Họ không chỉ có thể cạnh tranh với các công ty môi giới như TD Ameritrade và Charles Schwab, mà còn có thể thách thức cả các ngân hàng lớn nữa.
Đặc biệt là khi bạn thêm nhiều khả năng và dịch vụ hơn, sau đó phục vụ tiền mặt của tài khoản. Hy vọng bạn có cơ hội cạnh tranh để giành được tỷ lệ phần trăm cao hơn của phí. Một số công ty lớn hiện đang làm khá tốt.
Ngoài ra còn có các công ty khởi nghiệp khác đang cố gắng tận dụng xu hướng này. Một loạt các ứng dụng hướng đến đầu tư đã xuất hiện trên thị trường trong vài năm qua, bao gồm Betterment, Acorns, Stash, v.v. Nhưng không dễ để áp dụng cách tiếp cận của thung lũng Silicon là di chuyển nhanh, và phá vỡ mọi thứ trong công nghệ tài chính. Có rất nhiều đối thủ cạnh tranh với nguồn tiền thực sự dồi dào, và tất nhiên là hàng tấn quy định. Một số người đã chỉ ra một khía cạnh đạo đức giả của kỳ lân công nghệ tài chính, khiến nó không khác mấy so với phố Wall thời xưa. Vào tháng 10, Bloomberg đưa tin rằng công ty này nhận được gần một nửa doanh thu thông qua một hoạt động gọi là thanh toán cho luồng lệnh, nghĩa là một công ty trả tiền cho Robinhood để trở thành bên kia của giao dịch của bạn trên này.
All right, welcome back. I'm new on this show, so this is called a power check. Kelly, are you ready?
Check it out. It's
Just
cool.
check it out. All right, first up on the power check, JetBlue. The Fed's fining JetBlue $2 million for chronically delayed flights. This, Kelly, the first fine of its kind.
As a frequent traveler, I'm sure you're plagued by these issues.
Not on JetBlue.
You're not a frequent.
I fly an airline that rhymes with United.
Okay, or Helta. Yeah, got it. U.S. Steel is sliding lower. That's next on its deal with Nippon Steel as it takes another hit. The president blocking the takeover, saying steel is a national security priority. Actually, they're off the lows. I mean, they're down about 5.5%.
And after a monster 2024, a stock you flagged to us yesterday, Carvana, down again right now. It's losing steam. It's down about 8%. This follows allegations by a big short seller on a report that said the stock is a mirage. They made a bunch of allegations. I want to be clear, Carvana is denying or has denied many of these allegations, but still Carvana.
Yeah, big fallout on day 2. That report landed yesterday. And some other news in the auto space, GM and Ford reporting their best annual sales since 2019. And on the electric front, Rivian met its 2024 vehicle production targets after it had previously lowered those projections. So it met a lower bar. That said, Rivian shares are up 22% today. GM's fractionally higher, Ford's up 2.5%.
And finally, we call this a wolf for wolf. You're welcome. Wolf Research upgrading pet foods company Chewy to an outperform, i.e. a buy from a peer perform, because I guess you guys don't have pets, correct?
Nope.
Right.
I'd love to have one.
Why don't you get one?
Because you have to walk it. If
Walk
I can open
it?
Yes, I don't want to walk it and clean up after it.
I have two dogs, and I can assure you there's a lot of walking and a lot of cleaning.
Yes.
Chewy getting upgraded.
Let's go back to Emily Wilkins in D.C. with more on the speaker election or lack thereof, Emily.
Hey, Kelly. Well, at this point, we have just seen 2 of the 3 members who voted against Johnson come back to the Walter floor and change their votes for Johnson. This means at this point, Johnson should have the number of votes that he needs to become speaker on the first ballot. So a little bit of drama there, but it looks like he's locked it down. It doesn't seem like they have officially called it at this point, but it seems like with Thomas Massie will be the only Republican then who will not be voting for Johnson at this point. This, of course, opens up the way for them to vote on the rules package and then for them to get started on Monday certifying the election of Donald Trump. And then, of course, right on to a very ambitious Republican agenda that includes energy policy, border security policy, and an initial package. Also includes raising the debt limit, also includes funding the government by March 14th, and then, of course, that tax package. So they have a lot to do, but at this point, it seems like they have overcome their first initial hurdle of electing a speaker, and that Johnson does have the necessary votes. Kelly?
So wouldn't you love to know what happened in that cloakroom to get 2 of them to change their votes? And so now, Emily, is the gavel down? Is it official?
I will be honest, it doesn't look like the gavel is down at this part. I'm just watching a video feed and I'm still seeing members going ahead and mulling around. So it doesn't seem like there's any gavel yet. I will be honest, I'm not sure at this exact moment what they are waiting for. Normally the best policy is when you have the votes to go ahead and call it. But we're watching the situation very closely. And again, at this point, we've mapped the math. And it's looking good for Johnson.
Incredible. Again, markets hadn't moved a ton when it looked like he was going to lose this, and they're still rallying this afternoon on this. Somewhat surprising, maybe some anticipated it. Actually, we're moving towards session highs with this now out of the way. Dow's up 370. Emily, thanks. Let's get a check on the bond market as well. The 10-year yield. We saw it backing up, putting some pressure on the stock complex the past couple of sessions. We also had that ISM report coming in a little better than expected. We're creeping up a little, 458. The manufacturing PMI was still below 50, so the sector, yes, technically is still in contraction. And while today's the first Friday of the month, we don't get the jobs report until next week, so we await further catalysts.
And further ahead on this fine show, more exclusive Power Lunch data. We are going to reveal the top city top city out of 38 metro areas for the stock market in 2024. They're called the Power City Indexes. They're back, baby. And we're back right after this.
Tiền. Referee tranh cãi, nhưng lại phổ biến trong sân Kênh Breakthrough. Điều này có nghĩa là lệnh của bạn không diễn ra trên sàn giao dịch công khai, mà diễn ra sau cánh cửa đóng kín trong dark pool. Một số người cho rằng điều này giúp tăng hiệu quả thị trường, vì các công ty đầu tư vào việc thực hiện các giao dịch nhanh hơn. Những người khác cho rằng đây chỉ là cách để các nhà giao dịch máy tính tốc độ cao rút sạch mọi giao dịch, giữ cho thị trường không minh bạch. SEC đã đề xuất một chương trình thí điểm để xem xét hoạt động này.
Có một mối lo ngại có thể là nó đang lợi dụng. Các lập luận là nó bao gồm tính thanh khoản, rằng nó thực hiện những gì sẽ là một giao dịch nhỏ và tổng hợp nó và cho phép nó có được chất lượng thực hiện tốt hơn. Lý do để chạy một thí điểm là để đảm bảo rằng tất cả các yêu cầu đó đều thực sự hợp lệ.
Robinhood sẽ không tiết lộ số tiền họ kiếm được từ hoạt động này với CNBC, nhưng công ty đã đưa ra lời giải thích về hệ thống trên trang web của mình. Chúng tôi gửi lệnh của bạn đến các nhà tạo lập thị trường, cho phép bạn nhận được chất lượng thực hiện tốt hơn và giá tốt hơn. Doanh thu chúng tôi nhận được giúp chúng tôi trang trải chi phí vận hành doanh nghiệp và cho phép chúng tôi cung cấp cho bạn giao dịch miễn phí hoa hồng. Câu hỏi đặt ra là, một công ty xây dựng tên tuổi theo đúng nghĩa đen là công bằng có thể thuyết phục khách hàng của mình rằng họ đứng về phía họ không? Sao? Một cách để thực hiện điều đó là cung cấp lãi suất tốt hơn, và đó chính xác là những gì Robinhood đã cố gắng thực hiện. Vào tháng 12, công ty đã công bố tài khoản thanh toán và tiết kiệm 3cham.
So sánh với mức trung bình toàn quốc là 0,9% do hầu hết các tài khoản tiết kiệm cung cấp. Đối với một ngôi nhà trung bình của người Mỹ, có khoảng 8,0 đô la trong ngân hàng, con số này lên tới 240 đô la một năm.
Ngoại trừ việc công ty không phải là ngân hàng. Động thái
có rất nhiều lo ngại về việc ngụy trang thành ngân hàng. Các ngân hàng được quản lý chặt chẽ ở quốc gia này. Vì vậy nếu bạn có thứ gì đó không có các biện pháp bảo vệ được áp dụng xung quanh các hoạt động đó, và bạn cố gắng tự giới thiệu mình là một ngân hàng, họ sẽ không cho phép điều đó.
Vì vậy, tôi đã liên hệ với Robinhood. Họ không cung cấp bất kỳ thông tin chi tiết nào về khả năng tái khởi động tài khoản quản lý tiền mặt. Họ chỉ cho tôi một bài đăng trên blog và nói rằng, hãy theo youth. Trên hết, thị trường có thể đang thay đổi. Trong khi các tài khoản gần như chắc chắn đã tăng trưởng cùng với thị trường chứng khoán rộng lớn hơn trong nhiều năm, thế hệ thiên niên kỷ vốn đã bị tổn thương khi bước vào thị trường việc làm trong cuộc khủng hoảng tài chính, giờ đây chỉ mới nếm trải thị trường giá xuống đầu tiên của họ. Robinhood đã thu hút hàng triệu người dùng ngay sau khi công bố rằng bạn có thể giao dịch tiền điện tử trên nền tảng này vào đầu năm 2018. Nhưng đối với những người đã đầu tư vào Bitcoin vào ngày công ty bắt đầu cho phép giao dịch tiền điện tử, mọi thứ có lẽ không mấy khả quan. Đồng thời, một thế hệ nhà giao dịch trẻ hơn có thể sẵn sàng chấp nhận nhiều rủi ro hơn, và thị trường biến động có thể là cơ hội cho Robinhood.
Khi thời thế bất ổn, người tiêu dùng
All right, welcome back to Power Lunch. We got markets rallying to session highs. The S&P 500 up 1.4%. And the news that we just brought you from D.C. is now official. Mike Johnson, Speaker from Louisiana, has enough votes to remain Speaker of the House of Representatives. Joining us now to talk about that and more is Margie Patel. She is Senior Fund Manager at Allspring Global Investments. Margie, don't worry. Listen, we know you're not a political person necessarily. You heard talk about the markets, but this news just breaking. As a market person, is there any movement or fallout from this news out of D.C.?
Well, I think it's positive. It shows the Republicans are more or less united to trying to chip away at Trump's very, very ambitious program for the economy. So that's a positive.
Okay, so it's not like you're going to go out and change your strategy or buy this but not that because of this news, that it does look like, for all its dysfunction, there is a little function in the junction known as D.C.
Yes. And I think the big thing actually is that in a more general sense, there is probably no likelihood of increasing the corporate tax rate, which was a big increase before the election. That would have been a real on the market this year.
I have a very simple question about bond yields. What the heck happened to bond yields? I mean, in September, we're looking at a 3.6% 10-year. The Fed cut rates. They did the bazooka, 0.5 percentage point. You know, they were talking up the economy and cutting rates, which I found odd, but whatever, they're the Fed. All of a sudden, in the last 90 days, 60 days, bond yields have gone from 3.7, 3.8% to 4.6%. What did the vigilantes see?
Well, I think they see that inflation is going to be a lot more stubborn than the Fed had hoped, and it isn't going to be as sensitive, and especially if the Fed is cutting rates. Also, the Fed has shown itself to be very, very sensitive to damaging the economy. So I think it says basically the market thinks that the economy is very strong, so it likes it. And two, it says that inflation is likely to be higher than certainly that 2%, maybe around 3%. So bonds aren't quite as attractive as they were, say, versus equities with that scenario.
Well, how much is the stock market related to, or I guess symbiotic to, bond yields? Meaning that if we get a 4.75 10-year or a 3.75 10-year, does NVIDIA fall 20% or go up 20% based on where that number is?
Well, I think we've seen in the bond market over the last few years, and you can relate to this, that really the bond market has become more or less detached from the equity market. And I think it's because so much activity is away from the balance sheets of the banks, which the Feds used to control in private equity, private debt. So that's why we're seeing these movements we can't explain. But basically, if the economy is going to grow 2.5% or so, and inflation is, say 3%, really a bond yield of 4.5% is really not going to be an impediment to economic growth. Certainly a company like NVIDIA won't have anything to do with the growth rate or their PE if we're up to 5%.
We talk a lot about NVIDIA, Margie, but Targa Resources is up 112% over the past year. That's a pick you're sticking with, Curtis, right? You like broad, so you're basically identifying the areas where there are booms happening.
Yes, and I think you could say, well, the economy is only growing maybe at 2.5%, maybe faster, but some areas of the market are growing much faster, and that's where we think we should be invested. Technology continues to be a winner. We think the whole energy space is very interesting, especially the gas-related names, and also industrial names tied to the faster-growing sectors, data centers, power development, improving the grid, and aerospace, even autos, as you saw by the numbers today, looks like it might be a pretty decent sector. So we like specific sectors.
All right. And we love the idea of kind of rebuilding the USA, something like that. Margie, thanks so much. Good to see you today. Margie Patel with Allspring. Let's get to Kate Rooney now for the CNBC News Update. Hi, Kate.
Hey there, Kelly. Israel and Hamas confirming a new round of ceasefire talks resumed today in Qatar. Hamas saying in a statement it is serious about reaching a deal as quickly as possible. Meanwhile, the White House said today the Biden administration will make a final push to help broker a possible deal that secures the release of Hamas-held hostages in Gaza. Mexico's president, meanwhile, suggesting today her country would consider receiving non-Mexican migrants if the incoming Trump administration follows through on its promise of mass deportations. Previously, Mexico had said it would push for the migrants to be returned directly to their country of origin. President Claudia Sheinbaum did not offer details, but she did say Mexico would, quote, collaborate through different mechanisms. And finally, Elon Musk's SpaceX announced today its powerful Starship would deploy mock satellites in its next test. It will mark Starship's first ever payload test. SpaceX said in a blog post that the 10 simulators will be similar in size and weight to the Starlink satellites. The Starship's 7th test flight is tentatively planned for later this month. Kelly, back over to you.
All right, Kate, thank you very much. Beer, wine, and spirits makers are lower after the Surgeon General issued a stark warning about alcohol consumption and increased cancer risk. We'll get a live report on that next.
nhiều loại năng lực chuyên môn hơn. Vì vậy, sự bất ổn trong thời điểm này có thể gây sợ hãi và có thể khiến khách hàng giật mình. Nhưng nó thực sự có xu hướng tăng tốc, tăng trưởng.
Vậy thì điều gì sẽ xảy ra tiếp theo với Robinhood? Công ty tuyên bố rằng người dùng của họ đã giao dịch hơn 150 tỷ đô la trên nền tảng này và tiết kiệm được hơn 1 tỷ đô la phí hoa hồng tính đến tháng 5 năm 2018. Họ đang tăng cường đội ngũ điều hành, thuê một cựu chiến binh của Amazon làm giám đốc tài chính đầu tiên khi họ đang rón rén tiến tới IPO. Không phải là Robinhood chưa từng phải đối mặt với những thách thức trước đây. Chúng ta hãy cùng xem liệu sản phẩm tài chính ngày nay có thể sống theo huyền thoại hay không.
Cổ phiếu tăng vụt thì đến lúc nào có những điểm báo trước để chúng ta biết mà take profit là lấy lợi nhuận ngay lập tức ạ?
Cái thưa quý vị, đây là một cái câu hỏi thường xuyên hỏi, nhưng mà tôi cũng có nhiều câu trả lời, nhưng mà mỗi câu trả lời của tôi đều chưa chắc là nó đúng 100%. Lý do đơn giản là tại vì nó có nhiều cái khía cạnh quá trong vấn đề mà take profit. Nhưng mà một trong những cái mà tôi nghĩ rằng trên nguyên tắc mà tôi xài nhiều nhất đó là dùng cái RSI. Quý vị dùng cái RSI như là oversold, overbought, nhưng mà tôi dùng cái RSI giống như là một cái đo lường của cái căn cơ mà nó còn đi lên nữa hay không. Cái RSI.
Welcome back. A lot of the alcohol makers are lower today after the Surgeon General has called for warnings on alcoholic beverages regarding the cancer risks. Our Brandon Gomez covers the space for CNBC, and he's here now with the details. Brandon, what do you know?
Yeah, an interesting way to kick off dry January. A new advisory specifically calling alcohol the third leading preventable cause of cancer in the U.S. behind obesity and tobacco. The Department of Health and Human Services saying alcohol increases risk of at least 7 types of cancer, regardless of alcohol type. It's beer, wine, or spirits. The report also finds alcohol contributes to nearly 100,000 cancer cases and 20,000 cancer deaths each year in the U.S. So what does the Surgeon General want to do? Well, he's calling for reassessed consumption limits, advising public health professionals to educate the general public, and most notably, he's calling for new labels on alcoholic beverages warning of cancer risks. Picture those tobacco labels. Now, I reached out to the alcohol makers, both Anheuser-Busch and Brown-Forman, offering no comment, pointing me to trade organizations instead. A spokesperson at the Beer Institute saying, "We encourage adults of legal drinking age to make choices that best fit their personal circumstances." I spoke to an anti-tobacco nonprofit for how labeling played out there. He reminded me that SCOTUS actually refused to hear industry challenges to graphic cigarette warnings back in November. Those rolled out in 2020 during President Trump's first administration. Kelly, it's clear for investors this is going to be a Washington issue well before it's a Wall Street issue.
So when should we expect to actually see like a warning label on a wine bottle or a beer can?
So it's a long road to that step, but that is essentially what the Surgeon General is asking for, is some graphic imaging, much like the Trump administration had said would have to go on labels at the top 50% of cigarette labels. And so
or
that's
anything
the
that
expectation
causes
for long
obesity. If obesity is the number one cause of cancer, then we should put a warning label on anything that
Well, that's what people said. How about things with hydrogenated, all these sugars and oils and all of these other problems?
And anecdotally, somebody said, should we put a warning on gum packages because it causes cavities, right? Like, how far are you actually willing to go with this is sort of the debate that I think is going to take place in D.C. before, again, we see any sort of impact on these companies and products.
Kind of a mild reaction across this. A reaction, but a mild one.
Yeah.
Brendan, thanks.
Thanks.
All right, coming up, we've got even more exclusive data you'll only see right here on Power Lunch. The winner of our latest Power City Index coming up.
Nó swing 3 lần. Ví dụ lần đầu tiên nó lên tới 80, mà cái RSI nó là lên tới 80, quý vị có thể nhìn thấy giống như một cái oversold, nhưng mà thật sự nó chưa có oversold. Xong rồi nó swing xuống, cái RSI nó pull back lại, stock vẫn đi lên. Nhưng mà RSI nó pull back. Nhưng mà cái RSI nó trở lên, nó retest lại 80. Nhưng mà thường cái secondary time nó không có lên tới 80 được. Nếu mà lên tới 80 là cái stock nó quá mạnh rồi, nó lên nữa rồi. Cho nên nó lên khoảng cỡ 75 hay là 70. Đó là cái head thứ nhì. Thì là stock nó vẫn đi lên nha. Cái stock nó vẫn còn tiếp tục lên, nhưng mà cái RSI nó đã soften. Có nghĩa là sao? Tức là cái acceleration của nó đã bắt đầu bị soften rồi, thưa quý vị. Và cái đà thứ ba mà cái RSI nó move lên á, vào khoảng cái 60 70, thì tôi nghĩ là lúc đó mình offload rồi. Tại vì lúc đó là cái price versus cái volume nó không còn cái ratio không đúng nữa. Tức là lúc đó cái price nó đi lên rất là mau và cái volume nó không đủ để sustain cái price đó. Cho nên nó hit được cái level mà quý vị phải đi ra để mà lấy profit cái trend đầu tiên. Thì đó là cái mà tôi nghĩ rằng rất là quan trọng. Phải dùng cái RSI indicator, phải cho nó 3 cái swing,
3 lần test.
3 lần retest cái hai của nó, rồi thì mình đi ra. Để quý vị lấy nguyên một cái đà trọn của nó, thì cái đó là rất là quan trọng. Điển hình như là Roku bây giờ quý vị thấy rất là rõ ràng, Roku đã lên tới vào khoảng cỡ 60, nó retrace vào khoảng 55, có nghĩa là nó pull back vào khoảng có 10%, perfect entry level. Thí dụ vậy, bữa nay nó xuống 2 đồng, rất là đẹp. Tại sao? Tại vì nếu mà không xuống như vậy vì sao không có thấy đà thứ ba, cho nên nếu quý vị không có xin lỗi, đà thứ hai, cho nên quý vị nếu mà không có position của nó thì quý vị sẽ không có lấy được 70 đô đâu. Tôi nghĩ nếu mà Roku nó sẽ lên vào khoảng có 70, 75 trở lên chứ không dưới đó. Cho nên cái đà thứ nhì là mình sẽ re-entry. Cho nên quý vị cẩn thận, nhưng mà cũng phải keep watching, make sure là cái nó phải có 2 ngày retest cái short term pullback của nó để mà mình mới đi vô, chứ không phải khơi cái gì thấy nó
xuống cái là đi vô
liền không có được nha quý vị.
Vậy là phải retest 3 lần. Và ngoài cái yếu tố RSI thì mình còn xem những cái yếu tố nào khác nữa không anh?
Trong cái RSI đó thì chúng ta có cái volume, thì đương nhiên phải nhìn cái volume nó increase, decrease để mà mình adjust cái price level của mình. Tôi nghĩ rằng cái điều đó nó fundamentally nó căn cơ, nó còn căn bản hơn là quý vị, hơn là cả cái RSI nữa. Tại sao quý vị phải nhìn cái whole system để mà feel được, cảm xúc được cái lượng trading của volume. Nếu mà cái volume nó không phải là lớn nhỏ nhưng mà cái trader họ vô ra how often, khi mà cái cổ phiếu mà nó aggressive movement á, nó chớp rất là lẹ, đúng không? Nó chớp rất là lẹ. Mà khi nó pull back cũng vậy, khi mà nó pull back mà nó chớp rất là chậm đó, có nghĩa là nó còn bán ra ngoài, nhưng mà khi nó chớp thật là lẹ. Lúc bởi vì cảm xúc được rằng đó là cái the end of it, mặc dù rất là sợ nha, khi mà chớp quá lẹ on the way down, quý vị tưởng là nó bán ra dữ tợn.
Dạ đúng,
nhưng
chứ
mà
cũng sợ chứ anh.
rất là sợ, nhưng mà cái đó là nó đã reach cái the end of the sell off rồi. Cho nên nó mới chớp như vậy. Đó là những con cò cuối cùng họ sợ quá rồi, không còn tính cái gì nữa, họ cứ tung ra thôi. Cho nên đó là cái lúc mà bắt đầu mình trở vô lại, thì cái đó là một cái indicator mà mình kêu là feeling on the closed system, mở cái hệ thống closed system ra mình coi.
Anh, vậy báo cáo earning kỳ này hầu như là đã xong. Vậy theo cơ bản thì mình nên làm gì bây giờ anh?
Trên nguyên tắc đó, sau khi cái mùa earning đó, thì thường đó, nó khoảng cỡ 1 đến 2 tuần để mà tất cả những analyst họ ngồi xuống họ reevaluate lại cái hệ thống. Và trong 2 tuần này đó, ai lẹ tay trước thì sang trước, thưa quý vị. Có nghĩa là sao? Nhanh tay thì còn, mà chậm tay thì mất trong cái giai đoạn này. Có nghĩa là trong 2 tuần này rất là nhiều cuộc họp, họ sẽ ngồi xuống họ họp, họ reevaluate lại và cái portfolio, và nói rằng bây giờ cái này phải mua, cái này phải bán, vân vân. Thì tất cả những cái điều đó quý vị sẽ thấy rất là nhiều upgrade và downgrade trong vòng 2 tuần. Những cái upgrade downgrade đó trên nguyên tắc đó, thì đối với tôi nó cũng giống như là một trò chơi quảng cáo cho bình thường thôi, chứ thật sự ra trong nguyên bản cái cổ phiếu đó nó chỉ đợi một cái thời cơ đó để nó break out thôi. Tôi evaluate on the fly, chứ tôi không có ngồi xuống rồi làm một cái tập đoàn evaluation những cái cổ phiếu. Tôi vừa đánh vừa chạy và vừa ăn vừa nuốt, vừa tiêu hóa nó và vừa pick nó on the fly. Cho nên mình không có cái vấn đề là ok tôi phải ngồi xuống, tôi chỉnh đốn lại coi tôi
suy nghĩ
mình
cái
phải
này
suy nghĩ cái kia, rồi coi mình phải mua cái position mình bao nhiêu, nhưng cổ phiếu không cần thiết. On the fly mình đã làm lại rồi, mình vừa buy nhảy, mình vừa pick stock. Cho nên mỗi cổ phiếu mà tôi quyết định á, thường xuyên đó, nếu mà tôi phải quyết định một cổ phiếu đó trên 3 phút đó để mà mua hoặc là bán nó đó, thì là cái cổ phiếu đó không phải là cho tôi. Một cái cổ phiếu mà tôi quyết định chỉ trong vòng 30 giây cho đến 45 giây thôi. Khi mà tôi quyết định load một position và tôi nhìn một cổ phiếu đó, nếu mà nó không ăn ảnh đó, hay là không đẹp mắt đó, hay là nó không có một cái gì đó
thu hút là anh bỏ qua ngay.
Nó là một cái gì đó mà nó không có ví dụ như cái gì nó cũng đúng hết, ví dụ như earning nó cũng đúng, fundamental nó cũng đúng, technical nó nhìn cái chart nó perfect, nhưng mà tôi nhìn cái volume trading, tôi cảm xúc là tôi không mua được, là tôi không mua. Tại cái volume nó rất là đơn giản, quý vị, nó chỉ là cái liquidation thôi. Tới ngày hôm nay quý vị thấy Doku nó lên rất là nhiều, nói rất là nhiều người mua, nhưng mà chính cá nhân tôi chưa chắc mua. Tại sao? Tại vì cái volume trading của nó không đủ để tôi đi ra. Cái volume nó yếu quá. Ví dụ bây giờ mỗi lần chúng tôi vô ra rất là nhiều share chứ không phải ít share, mà tôi offload như vậy, đi vô ra cái liquidation nó làm cho tôi rất là khó chịu. Mình rất là bực mình. Cho nên mặc dù vậy, như là AMD quý vị thấy một ngày nó trade vào khoảng cỡ gần cả 100 triệu share mỗi ngày, cho nên cái liquidation nó dễ dàng mà đi vô đi ra. Tôi chỉ cần bấm nút đi vô ra, tôi rất là thoải mái.
right, welcome back. You know what time it is? It is time for more exclusive content right here on Power Lunch. And we have been tracking the biggest market cap companies in nearly 40 different city and metro areas for a decade. We call them the Power City Indexes. You've seen them on CNBC for years. And now that the year is over, we can show you who won the stock market for the year. Again, it's, you know, listen, they're equally weighted. There's no market cap weightings. Take it easy. But in terms of what is the best median performance of any metro area, the honor, Kelly, goes to Austin, Texas. Austin, you go. Its 12 biggest companies had a median return of 47% last year, led by huge gains in your favorite company, Natera, Q2 Holdings, Flex, Oracle, Tesla, and more. In fact, the only one company based around Austin in that 12 biggest market cap that fell was cup and cooler maker Yeti. They were down last year. They're the best performer. Second place, by the way, on our Power City Indexes, Miami.
Interesting.
Miami. Summit Therapeutics, Royal Caribbean, and more did well. And the Wump Wump Award for the city that did the worst in the stock market last year was actually our beloved Philadelphia.
Oh, dear.
It was actually negative on a median basis.
I recognize a couple.
I love Philly, great people, better food than New York, but not a great stock market. There you go.
Year for them. Let's trade them. Some of these names in 3-Stock Lunch with our trades Boris Schlossberg, is Managing Director of FX Strategy at BK Asset Management. He's a CNBC contributor. Boris, feel free to chime in with your favorite city, but we'll start with Tesla, which was one of Austin's stars. Up 62% last year, 7th positive year in 8. What do you think?
Yeah, I agree with Sully. Federal Chicken Philly, best food there is. Unfortunately, they're last place. So Austin, Tesla, obviously, you know, people like Tesla as a stock, though. But I think at this point, it's really a question of whether that stock is grossly overvalued based upon the fact that you view it as a car company, or whether you think it's just actually an AI transportation company. Now, if you view it that way, and Musk has this forecast of doing 2 to 4 million robotaxis, it's a completely different ballgame, and I think that the stock goes higher. At this point, it's really hard to chase it in the 400s, but if you want to buy it, you could sell 350 puts in March for $20, so you have an enormous amount of premium and get a very good toehold on the stock at that level.
All right.
Next name, we're going to go right by Austin to our second place performer, Miami. Royal Caribbean, one of the top names, second straight year of gains. RCL, big year. What do you see ahead, Boris?
So this is a true tension between the growth of the business, which it's expected right now it's doing 30 million cruise tourists across the world. It's expected to go to 40 million by 2027. And of course, Royal Caribbean prime beneficiary of that. But it's also got 5-to-1 debt to equity ratio. It's got a massive debt service at this point, and cash flow only for about 9 months on hand. So in many ways, the bet on Royal Caribbean is actually a bet on lower rates. It's going to help it as much as a good growth business going forward. So if the 10-year goes down and employment stays relatively steady, Royal Caribbean continues to be a great buy. But it's just, you got to be very careful at this point because they are very, very leveraged to the upside.
All right, let's pick a name from Philly then. Let's do the worst performer, shall we? It was Five Below. The discount chain, the shares dropped 50% last year, which is its worst year back to its 2012 IPO. Surprising. I mean, maybe ahead of the tear. I don't know. The stocks went down a lot of the year. Boris, what do you do?
Yeah, you know, just like Rocky, you got to believe in a comeback story. I mean, Five Below is hated. It's down 50% from last year. Everybody is really, really wary of it. Yet in the last quarter, they had a 15% increase in revenues and new management coming on board. If they can stabilize and just have incremental growth, there's a potential here for it to go to 125 from 100 currently. So I really like it as a speculative long buy. It's a great company. They just simply need to, reorient themselves. I think they have a chance here to come back, just like Rocky.
Any other dinner recommendations in Philly?
I forgot the Israeli place. It's super famous, but it's really, really good. Zahav, thank you. Yeah, see, Sully knows. He knows. But those are, we all love Philly.
Look at me. You don't know about food.
I love how Sully knows the Israeli place.
Zahav, it's I'm not joking. I love Philadelphia. I travel constantly.
Forrest, thank you.
Thanks for watching Power Lunch, everybody. Have a great weekend.
Closing bell starts right now.
And welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with a belated New Year's celebration on Wall Street. The index is tracking to end a 5-day losing streak with a brisk rally. The S&P 500 up more than 1%, more like 1.3%, trading back almost exactly at this moment to its 50-day moving average, helped by a rebound in several marquee tech leaders and a better than expected reading on manufacturing activity this morning from the ISM. Now, that same upside data surprise also allowing for Treasury yields to stay firm, with the 10-year well above 4.5% once again as equity investors try to make their peace with a less dovish Fed and unclear fiscal policy impacts in the coming year. Now, none of that is slowing NVIDIA shares, though, which are now up 5%, better than that, in fact, over the first 2 days of this trading year, and have returned to the upper end of a 6-month trading range. Which takes us to our talk of the tape. Is the market now free of the indecisive December choppiness that dropped the average stock by more than 6%? And what are the crucial catalysts to watch from here as January unfolds? Here to take on those questions is Fund Stretch Tom Lee, a CNBC contributor, of course. Tom, good to see you. Happy New Year.
Happy New Year to you.
So first off, Tom, what's your diagnosis of what the market's been contending with here in the last several weeks as we've gone sideways and had sort of this negative skew toward market breadth?
Markets kind of did flail into the end of last year and the first day of 2025. And I think it was trying to digest a few things, that the pretty dramatic move in long-term yields and the dramatic drop in yields in China. I think that there has been some concerns about macro as you saw some events over the past few days. And I think there was general profit taking and some sort of let's wait and see how 2025 is, given we just booked 20% back-to-back years.
And do you think that those things will remain overhangs? I mean, obviously, you certainly have a bullish orientation. You feel as if the S&P 500 can get to 7,000 by mid-year before perhaps a pullback. Well, if we're getting from here to 7,000 in less than 6 months, you're talking about 35% annualized pace of gain. So how do we get there?
Well, I think one thing the viewers need to keep in mind is that just because the calendar year changed doesn't mean that the strength that we saw throughout 2024 suddenly has evaporated. There are tailwinds building because the Fed is dovish, even if they're making fewer cuts. But I think one of the sort of two important things happening early in 2025 is going to be, one, we're seeing manufacturing recover. The ISM manufacturing, posted one of the highest readings in almost 2.5 years. I mean, it's been below 50 basically for nearly 3 years. And the second is that I think the labor market could be softening in a way, because whether you look at link-up data or the ISM employment, to tell us that the Fed now has to be focused back on supporting the economy. So I think this month could be quite decisive in the sense that we've got weakness because of some insecurities building, but I think it's, the same tailwinds are in place. I mean, I think it's still a buy the dip kind of market.
And in terms of perhaps the same themes being in place, does that mean that the leadership profile of the market you expect to stay similar to 2024? I mean, I know it's waxed and waned between mega cap growth leadership and then some broader participation, but we did finish again with dominance by the NASDAQ 100 type stocks.
Investors still are going to pay for earnings visibility, and that's why I think the Mag 7, including NVIDIA, are going to be important holdings. But financial conditions should ease this year. Easing financial conditions does allow some cyclicals to post better earnings growth, like financials and regional banks, industrials, and small caps. So I think that there should be a case for broadening of the markets this year. And then finally, I think in terms of risk appetite, still one of the good measures to look at how risk appetite is to look at something like Bitcoin, and at 97,000, it's still telling us that this is still a risk-on market.
Yeah, I mean, obviously it's held almost all of its gains since that little poke above 100,000 in Bitcoin. Although I do wonder what you make of the relatively heavy outflow we were seeing in the BlackRock ETF that holds Bitcoin, whether it was just sort of deferred profit taking into a new tax year or something else.
It's hard to tell. And I think with the ETFs, it is creating, I think, an interesting dynamic, which is that someone who sells a BlackRock ETF doesn't have a 30-day holding period if they buy another Bitcoin ETF. So I think in some ways you can see people doing basis swaps and stepped up in tax optimization strategies and not really having to worry about that 30-day holding period.
Right, the wash sale rule. Yeah, no, that certainly would make sense as tax planning and a tactical basis. Again, on small caps, I mean, it feels as if we've had these false starts in terms of the comeback for smaller stocks, and many theories fly around as to whether you really need market bond yields to go down, you really need the Fed to get more aggressive, or you really need it to look like the start of a new cycle as opposed to the continuation of an existing one.
Yeah, small caps have been frustrating because there have been a lot of rug pulls, especially last year. I've been disappointed that small caps haven't sustained gains. But we know earnings visibility is better this year. You can look at either bottoms-up numbers or median EPS growth. And not only are they accelerating for the Russell 2000, they're still almost, at least at the index level, 2,000 basis points higher than the S&P earnings growth. So I do think this is a year where, as long as the Fed is committed to getting towards neutral, so that's a caveat because, of course, if inflation reaccelerates, small cap should really be an important beta play to that easing of financial conditions that follows.
And just in terms of what have seemed to be perhaps headwinds or causes for investors to pause a little bit in terms of seeking risk, the 10-year back to 4.6% or so as we speak right now. Of course, you've had this massive ramp in the dollar. Both those things could be occurring for relatively benign or even outright good reasons. But it does seem as if the equity markets need to sort of figure out if they have the chance of being a little more hazardous.
That's right. I think investors understandably get leery when they think that there could be a 5% on a 10-year. And that means investors kind of sit on their sidelines and see if the markets can handle it, if it doesn't damage the economy or companies. And then eventually, our expectation is that investors are going to be okay with even something like a 5% 10-year, just because that's still a 20 PE for a risk-free bond, and existing equity PEs can actually go up. But of course, it'd be better to see 10-year yields closer to the low 4% than 5%.
Right. Yeah, it seems like that's where equity investors are slightly more comfortable, though. Again, you can kind of make your piece at different levels. Tom, back to you in a second. Let's bring in Jason Snipe of Odyssey Capital Advisors and Megan Shu of Wilmington Trust. Jason, of course, a CNBC contributor. And welcome to you both. And actually, Megan, before we get into the whole big picture backdrop, I did want to bring up something that Richmond Fed President Tom Barkin said today, and it gets at this whole idea of the interplay between growth expectations, Fed policy, and interest rates. He essentially was pretty positive on the growth profile in general, and essentially saying, we can stay restricted for a little while longer. It's a very wait and see type of message. He expects more upside than downside in terms of growth. Labor market more likely to break toward hiring than firing. And, bond yields did lift after this. You happen to think, Megan, that perhaps the Fed is going to have to be forced to do more cutting. Why might that be?
Yeah, and I think that Barkin's comments do summarize generally the gist of what we've gotten in terms of the tone from the Fed of late. And our view is that relative to consensus expectations, we are a bit more concerned about growth and a bit less concerned about inflation. We just do not see the ingredients needed to have inflation materially reaccelerate. We think it could be sticky on a year-over-year basis, but will continue to trend lower. And in fact, we're a bit more concerned about the state of the labor market and the state of the consumer, which on the surface has been very strong. But as Tom mentioned before, if you look at some real-time job opening data, JOLTS and different metrics of job openings, they are plummeting. We're really not seeing any sign of them leveling off. If they continue to move lower, we think that will start to show up in some real weakening of the labor market. And that should also curb consumer spending, which again, on the whole, has been relatively strong. But if you dig down into what consumers are spending on, it is an increase in a lot of sort of must-haves, medical bills and other necessities rather than discretionary items. So we think that the Fed will be cutting considerably more than they indicated in their summary of economic projections, which should help the market on the whole. But again, we are attuned to some weakening of the overall economic backdrop as well.
Yeah, I suppose the fact that the Fed's most fixated, in terms of the economic metrics and growth indicators, most fixated on labor markets to take their cue from there, that's a positive in the sense that, you know, any further weakness there probably would pull a pretty strong Fed response. On the other hand, historically, when the Fed is getting more aggressive in terms of easing to prevent a downturn, that's when stocks struggle. How would you reconcile that, Megan?
Yeah, I mean, I think if the Fed is easing because the labor market is deteriorating, that could be a concern. But we think that we can still strike the right balance and achieve that soft landing. Our GDP forecast is just a little bit below consensus for next year, but we think that easing will help, and that could be very different from what we've seen historically, which is that the Fed's more often than not been behind the eight ball. They've been cutting when it's too late and when the economy is heading into recession. But a recession is not our expectations. We think it could still be a good year for equities, just probably not the returns that we've seen over the last couple of years. So a little bit more about staying invested. We are modestly overweight to our benchmark, but really just sort of managing expectations from here.
Jason, as the early action, not just this year, I guess, but really leading up to the turn of the year, given you any reason to rethink the overall trend of things? Or what's your, I guess, sort of top-line observation of how you'd want to approach this year?
Yeah, I think there's been a little bit of a digestion. Obviously, momentum is really strong last year. I mean, the momentum factor in of itself was up 48% in 2024. So I think there was a little bit of digestion in the last few days of the year. And then I think what we had in middle of December was obviously we had a hawkish cut. You know, with the Fed talking about they're not going to be on autopilot in terms of lowering rates in 2025. They're going to be more in a wait and see mode. And I think that was another pill that the market has had a difficult time digesting over the last couple weeks. But I think as we turn the calendar into the new year, obviously where we are now, the other factor that we've been monitoring very closely, which you've talked to Tom earlier about, is obviously the 10-year. I mean, the 10-year close to 4.6. Potentially floating higher. I do think the market is potentially sniffing out some concerns around inflation. What will immigration policy look like? What's the Fed story going to look like? And what are potentially tariffs talk going to look like into 2025? And I think that has been part of the catalyst and what's been moving the 10-year. So I think that's something that's for us closely to monitor. You know, we saw what happened in 2022. We're coming off of two really strong years in the market. So I do think there's opportunity, particularly with earnings starting in earnest in the next 2 weeks. But we're definitely in a more patient mode as we kind of review all the various factors as we look at the markets.
Yeah, I guess, you know, the lack of policy visibility, as much as there are many expectations about what policy moves might be made, Jason, this coming year, the lack of policy visibility often causes the market to kind of migrate back toward the known quantities of mega cap tech. I mean, obviously it's what happened in December. You're pretty well exposed in that area. Have you seen any reason to either lighten up there or, I guess, even press the bets?
There's no doubt about it, Mike, that obviously these names have done phenomenal in 2024, and we will be doing some trimming. I definitely don't think they will trade as a monolith as they didn't last year, obviously with Microsoft being the laggard there, only up 12-13% in 2024. So for us, we favor Amazon as it relates to the Mag 7. I think they've really strengthened their operating leverage. You know, as I look to AWS in the cloud, I mean, the margin growth there was phenomenal. I mean, the operating profit was up 50% year over year. You know, the cloud growth was up 19%. Year over year as well. So there will be picks in that space. NVIDIA, I think, will of course be another great story, but I don't think all is well there. I don't think they'll all do phenomenal in the way that they did a lot in 2024. So you know, we're going to kind of pick and choose, but definitely looking to trim some of the high flyers from 2024.
Yeah, in fact, it's been kind of beneficial in a way that the Mag 7 have gone their own way at times and kind of kept volatility lower. It's kept the whole NASDAQ from maybe getting a little bit overheated all at once. Tom, I wonder what your thought is about the general expectations level of investors and Wall Street and strategists and such. The last couple of years, as we started January, people were able to point to a really deep well of skepticism, and you had very modest S&P targets on the sell side. You had a lot of economists saying we're at risk of recession. There's not a lot of that as we start 2025. Basically, a bullish consensus, feeling as if a lot of things are primed to work. Is that a concern?
It always is a concern because we know when you get to a top, it's because investors have now made a judgment error thinking stocks don't have downside risk. I don't think we're at that point yet because we know that shorting activity has increased pretty sharply in the past few weeks. And speaking to our own clients, many have been skeptical about how stocks can do in 2025 because they view it as a stock picker's market given the back-to-back gains. So I think the institutional universe isn't really as bullish as many believe they would be because I think many just think, a lot's priced in. On the non-institutional side, I think when we look at some of the feedback from our clients, they feel pretty beaten up since mid-December. I think that sort of drawdown has actually taken out a lot of bullish expectations. So I don't think people are bearish, but I don't think they're as bullish as many claim investors are.
Yeah, that's fair. I mean, the surveys recently have shown a little bit of moderating bullishness, some of the positioning data as well. Megan, for an investor who's, I guess, got a more diversified portfolio, you're looking at this year, what stocks gave you last year and maybe what the bond market is offering there. Are there any kind of clear moves or reorientations you think they should be making?
Well, I think for one, we have recommended and we'll probably see other investors rebalancing because you had a stellar return for the equity market, really lackluster for bonds. Going forward, actually, where you have the yield on an aggregate bond index and where we expect rates to go, you're probably looking at pretty decent annualized returns over a 3 to 5 year basis for bonds. So we are neutral to fixed income. And recently we took down our equity overweight trimming from U.S. small cap, a little bit more cautious than Tom is on the small cap space. But I would say stay underweight to cash, stay neutral to fixed income. The obvious risk is upside risk to rates, which we've talked about, and certain policies from the new administration could put upward pressure on yields. And we would look at this 4.5% level on the 10-year to add volatility, but the 5% level to really be a bit of a red flag. So as we're looking at positioning, again, it's about rebalancing, staying fully invested in equities, a little bit overweight, and neutral to bonds.
Yeah, we've only really touched 5% real briefly in this cycle. And before that, it go back a long way since we did have to contend with that. See how it goes if we get there. Tom, Jason, and Megan, thank you so much. Appreciate it. All right, let's send it over to Christina Partsinevelos for a look at the biggest names moving into the close. Christina.
Thanks, Mike. Well, shares of U.S. Steel are tumbling after President Biden blocked the nearly $15 billion takeover of U.S. Steel by Japan's Nippon Steel. The president cited national security, which U.S. Steel and Nippon Steel have definitely pushed back on, calling Biden's decision, quote, unlawful. U.S. Steel is down about 5% today. And Block is popping right now. Raymond James upgrading the fintech stock to outperform from market perform. Analysts saying they have greater confidence in Block's 2025 acceleration story with estimates for double-digit growth just this year alone. Shares are up over 6% right now. Mike?
Christina, thank you. Talk to you again in a bit. Well, Congress re-electing Mike Johnson to be House Speaker just in the last hour. Let's send it over to Emily Wilkins in Washington for more on how this all came about. Emily.
Hey, Mike. Yeah, dramatic day in D.C., but Republicans have survived their first test of a new Congress, re-electing Mike Johnson, who is speaking now from the House floor as Speaker on the first ballot. There was still some drama, though. 3 lawmakers initially voted for someone other than Johnson, while another handful of holdouts held their votes until the end, not signaling how they would vote. But eventually, every single Republican, save for one, save for Thomas Massie, did back Johnson. But Johnson got everyone on board in part through promising a working group to help coordinate between DOJ and lawmakers on cutting federal spending. But some Republicans, they still have reservations. The House Freedom Caucus released a letter moments ago signed by 11 lawmakers saying that there is always room to negotiate on the so-called leadership positions under the rules. Personalities can be debated later, but right now there is zero room for error on the policies the American people demanded when they voted for President Trump, the ones necessary to save the country. And the letter goes on to name several of those policies that members want to see, including, of course, cutting federal spending. So, Mike, today is definitely a win for Mike Johnson. But, of course, the real challenge lies ahead, getting consensus on things like raising the debt limit, getting near unanimous agreement on immigration, funding the government. Those are going to be really tricky battles. So it's definitely taken the W today for Johnson. But we are going to have to see, because certainly there's still some trouble out there. There are still reservations, and that could have a big impact in exactly how much Republicans are able to get done.
Oh, for sure. Tight margins, lots of differing priorities. Emily, thank you. It could be one of the reasons the stock market is exhaling just a little bit, getting past this hurdle today. We are just getting started here. Up next, your 2025 tech playbook. Plexo Capital's Lo Tony is standing by with what he's expecting from that sector and how he thinks a new administration could impact big tech. That's after this break. We are live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Một cái trục trặc, cho nên tất cả cái gì nó có thể đúng trong vấn đề mà căn bản. Các tưởng thấy không, căn bản technical đó là đúng hết.
Đúng.
Nhưng mà khi mà nó đụng tới cái physical mà allocation, cái strategic của nó, cái nó kêu là cái technique của nó, cái performance của nó trong cái volume, cái trading, cái đại cương đó thì mình không có dám đụng tới, tại vì đơn giản là nó không có meet cái preference của mình, cho nên mình không làm tới thôi.
Rất là hay. Cảm ơn. Là anh có thể nói sơ qua về những cái phân lời và cái sức mạnh của phân lời là như thế nào không ạ?
Kính thưa quý vị, đây là những cái đề tài rất là tế nhị. Nếu nói mà không thông suốt thì có thể bị chê rất là khó. Nhưng mặc dù vậy, cái căn bản của tiền lời, có nghĩa là hãy tiền lời tăng thì tất cả những cái công cụ đầu tư nó phải rớt xuống. Tại sao? Đơn giản thôi quý vị. Tại vì khi mà tiền lời nó tăng lên thì cái currency, money nó sẽ bị tight vô. Tức là nó sẽ bị poor lại, nó sẽ giảm đi cái số tiền mà nó đang flow ở trong cái cộng đồng của mình để mình xài. Cho nên tiền lời nó tăng lên là như thế, để mà nó thay cái currency nó lại. Thì khi mà nó lên như vậy thì vì không đủ tiền để mình đi đầu tư. Tiền mình nó nằm trong nhà băng hết rồi, tại vì nhà băng nó lên tăng tiền lời, người ta bỏ vô saving, người ta cất. Đó, người ta càng cất nhiều trong saving thì không có tiền ở ngoài để mà đi đầu tư. Bởi vì theo, cho nên điều đó là cái điều mà nguy hiểm, mà nếu mà không làm như vậy thì lạm phát nó sẽ không được control. Mà lạm phát mà nó lên á, nó còn nguy hiểm hơn rất ngàn lần mà cái cổ phiếu của mình mà nó sụt giá. Cho nên khi người ta đưa lên cái bàn cân để mà cân nhắc thì người ta đã tính cái điều đó rất là rõ ràng. Tại vì thứ nhất mà về cái vấn đề mà tiền lời đó, quý vị biết rằng đó, tiền lời á mà nó không được tăng lên đúng mức thì cái đồng đô nó sẽ completely nó bị bị hư hết. Đồng đô mà nó rớt xuống rồi, nó thấp giá trên thị trường, quý vị không có trao đổi được, không có làm ăn gì được ở ngoài kia. Cái gì cũng không, nó tóm lại là cuộc sống rất là thê thảm. Nếu mà đồng đô của mình nó rất là thấp.
The Nasdaq outperforming today, on track to snap its longest daily losing streak since last April after gaining more than 100% over the past 2 years. Can the tech sector maintain its momentum into 2025? Let's ask CNBC contributor Lo Tony of Plexo Capital. Lo, it's great to have you on. I guess you get into a new year, and maybe it's logical to ask, has much changed in the way of the big themes and the trends that have been underway for a while? I had to point to this Microsoft story today. The company saying it's going to spend $80 billion this year on new data centers, more than half of that in the U.S. I mean, when you have the biggest companies spending that urgently, I guess the big money, if not the smart money, is betting that these trends are well entrenched.
First, thanks for having me and Happy New Year. And yes, to your point, without question, we've seen the momentum building up. We saw early on experimentation, but now we're actually seeing full-scale deployment rapidly. And I think the investment by Microsoft, at least the announced investment, reflects that.
And then how do we think about, I know it's almost become trite now to talk about, the expected return on this spending and the payoff, and presumably they feel as if they have to do it and know how to get paid for it. But what does it mean for other players? I mean, these companies like Microsoft, like Amazon, for a long time, or Meta for sure, were seen as just these kind of virtual platforms, these profit machines that just sustain themselves. It was all network effects. And now they're spending tens of billions each to create physical infrastructure with the hope of getting paid down the road. Does it change the basic equation in terms of how we should think about these businesses?
Well, that's a good point. When we think about the models that were most attractive, these are what we like to call increasing returns models, where the ability to write code once and to be able to deploy it as many times as possible was the reason that we saw such incredible margins from these companies. And the infrastructure required was not as significant as the need is today, to your point about the rapid growth of the services that revolve around AI. That requires much more compute power, which is why we're seeing these massive investments. So to your point, yes, it does slightly change the calculus, and those are things that we'll need to look to better understand, what will be the potential new margin from the increase in this new line of business that requires this additional infrastructure investment.
And what about new players, smaller companies, those that would try and participate in this emerging ecosystem but don't have that scale? So, I mean, is it just going to be about, software around the edges of this stuff? Are we going to see a handoff, as we did with the build out of the internet, from the hardware creators and networking and broadband into software? And when might that happen?
Yeah, these are some really interesting points that are being raised, because when we look at the innovation cycles, when new technology or new platforms in particular typically emerge, there's this restructuring or an emergence of new players. The challenge that we see today is that some of the requirements that we've talked about, particularly those infrastructure requirements, are just so massive in terms of the amount of capital required. That's going to reduce the level of competition in certain areas. However, we still believe there's plenty of room left for innovation, to your point, around some of the other edges and areas within the entire ecosystem. So we're very bullish on the ability for new players to be able to emerge, whether that's some of the existing names that we hear today, like OpenAI or Anthropic, which is a Plexo Capital portfolio company. Mm-hmm. There are other areas, and I think what we'll start to see some more specialized areas within AI, if we're going to talk about AI, or even in some of the other areas that are going to be supportive players within the ecosystem.
One of the ways, I guess, that the market gets its arms around what the opportunities are and how to leverage these big trends is through the IPO process, right? You have a lot of deals coming, these companies kind of They try to give you their pitch. You evaluate how they perform in the market, whether in fact the business models work. Presumably, we're going to have to start seeing some more on that front, just because there would seem to be some pent-up issuance here.
Yeah, without question. I mean, there's probably about 700 unicorns within the private markets that are looking for liquidity. And that liquidity is important. It's important to the innovation cycle. We need the ability for companies to IPO, to have better exposure to a broader set of retail investors, to be able to return capital back to investors so that they can recycle and invest in the next innovation curve. And we just haven't seen the ability to have the window open for that IPO pipeline. You know, we saw some glimmers of hope, you know, without question. Service Titan, Reddit, which was a Plexo Capital portfolio company as well. And we're bullish on what we see in the pipeline, companies like, let's look at Chime or Klarna or Turo. But we're still not ready to get back to that robust period, in my opinion, of 2020, 2021, you know, but we're on the right path. So without question, I think we will see opening the window a little bit and some more companies come out. If we see those companies perform well, that bodes well for the entire ecosystem.
Yeah, I mean, any one of those names that you just kind of threw out there would probably be a pretty substantial deal. We're not talking, I guess, about the real early stage startups just trying to grab some public capital.
That's right. And the other area I think we should watch, you know, speaking of the new administration, there will be changes to the SEC, the FTC, and DOJ. You know, without question, the leadership will change and there'll be a new agenda. And I think that will bode well for the big tech companies, the tech industry in general, whether that's public or private, because we'll see a loosening of regulation around things like AI. I think we'll see a little bit of loosening around the impact of the scrutiny that's applied towards big tech when they're looking towards acquisitions. I think we'll now see a shift with this new administration away from trying to break these companies up and just trying to, you know, make sure that there's more behavioral changes. So that's good. We'll see more M&A, which also, again, back to funding innovation, capital will return as a result of M&A activity as well. So all these factors will play well, I believe, for the next 4 years with this new administration, the changes they'll make, you know, loosening cryptocurrency. And I think this is going to bode really well for people that are interested in the technology sector and things that are influenced by tech.
Yeah, well, there's no doubt tech and Silicon Valley have a spot in the inner circle of the incoming administration. See how it goes from there. Lo, great to talk to you. Thanks so much.
Thanks for having me.
Lo, Tony. Up next, 314's Warren Pies is flagging what he thinks is the biggest risk to the market this year, and it is not inflation. He'll join me after this break.
Mà nó càng nhỏ chừng nào ở trên cái quốc gia đó thì quốc gia đó càng mạnh chừng đấy. Mà cái đồng tiền nào mà nó trị giá mà lớn nhất đó, như là tiền Việt Nam mình là bạc trăm ngàn hoặc triệu, nói một con số mà mình nghe mình không tưởng tượng được, hay là tiền của Zambia cũng vậy, nó nói là bạc tỷ, $1 đô la là một bạc tỷ đó, mình chịu không nổi luôn. Nhưng mà ngược lại bên QE, đồng tiền của QE đó, quý vị vô coi, một đồng tiền QE chỉ có 20 cent, 10 cent thôi. $1 đô la mình chỉ đổi được có 2 cent, 3 cent, 10 cent, 20 cent cái đồng tiền QE thôi. Cho nên đất nước người ta giàu là cái chỗ đó. Đó. Cho nên mình đừng có ham muốn là đồng tiền mình nó lớn, nó to lên, nó không có cái xác suất đó. Thì bây giờ mình trở lại cái tiền lời. Tiền lời nó là một cái vehicle, hay là đúng là một cái lưỡi dao mà chính phủ Mỹ hay là chính phủ cả thế giới họ dùng để mà họ control lạm phát. Tức là họ đại khái là họ quán xuyến cái lạm phát. Cái quyết định để mà tăng tiền lời hay xuống tiền lời, đó là một cái tập đoàn rất là lớn ở nước Mỹ này, có 8-9 người họ quyết định điều đó, và luôn cả nhà băng họ get together rồi họ họp lại để họ quyết định cái lãi suất. Theo tôi nghĩ đó thì nước Mỹ này đang đi đúng đường trong vòng khoảng 7 năm nay về vấn đề lãi suất. Mặc dù bây giờ lately quý vị thấy là lãi suất nó hơi tăng chút xíu, mặc dù lãi suất nó tăng nhưng mà thị trường nó vẫn lên, và đó đây là một cái trick mà hầu như không bao giờ xảy ra. Tất cả những cái quá khứ mà khi mà Cộng hòa mà bước vào mà control cái house đó, bước vào cái tòa bạch ốc đó, thì là lúc nào thị trường cũng phải đi xuống. Và thị trường khi mà lên cái cao điểm nhất là khi mà dân chủ xong cái nhiệm kỳ ở trong tòa bạch ốc, là thị trường nó cao điểm nhất. Nhưng mà đây là lần thứ nhất trong cái lịch sử lâu lắm rồi, cho nên những người mà short sale đó trong vòng 6 tháng nay rớt hết là vậy. Họ không predict được. Mà
cổ phiếu lên hoặc là xuống thì với những cái dấu hiệu, những cái indication đó thì mình lấy đó từ đâu ra?
Hầu hết tất cả những bạn bè hay là những người mathematician hay là những nhà toán học đó, thì họ dùng toán học để mà họ làm những cái công thức đó. Mà quý vị biết rằng đó, toán mà muốn formulate một cái công thức trên thị trường mà nó đơn giản như vậy để mà xài được đó, thì tôi nghĩ rằng nó chỉ có xài được trong vòng một cái thời gian rất ngắn thôi. Mà khi mà nó lọt ra khỏi thời gian khác, nó không có đáp ứng được cái nhu cầu của quý vị đâu. Thị trường này là thị trường nó có combine giữa 4 cái khía cạnh khác nhau. Thứ nhất là khía cạnh về quantitative, tức là nó về cái vấn đề mà con số. Thứ hai đó là về vấn đề cảm xúc. Và cái thứ ba đó và là về cái vấn đề chọn lựa. Mình phải biết chọn lựa. Và cái thứ tư là về cái vấn đề timing, tức là mình phải biết cái lúc vô và lúc ra. Tại vì quý vị biết rằng cũng một cái cổ phiếu đó, tại sao cái anh A lại lúc nào cũng make money khi mà anh mua ra, anh lúc nào cũng làm ra tiền. Cũng một cái cổ phiếu đó khi mình đụng vô thì lúc nào nó cũng không đi đâu hết, hoặc là nó rớt xuống. Cũng cái cổ phiếu đó. Rồi khi mình vừa bán thì nó đi lên, mà mình vừa mua nó đi xuống. Tức là rồi mình xoay qua mình nói tại sao cái cổ phiếu này nó lại không có kêu là phong thủy, nó không giống tôi thì sao đó, đại khái gì nó không đi, không hợp phong thủy. Thì quý vị có lẽ quý vị phải nghiên cứu cái đó, nhưng mà thật sự ra tại vì mình không có.
Welcome back. Stocks rallying today, led by high growth areas like discretionary and tech. But our next guest warns many, including key Fed members, are overlooking one big risk to markets this year. 314 Research co-founder Warren Pies joins me now to talk it through. Warren, great to see you. It's interesting, for as steady as the broad U.S. economy has been in its performance the last year or 2 years, we keep alternating between a growth scare and inflation panic. It feels like economic volatility as far as the market's concerned, risk getting out of control. What are we in for as we get into 2025?
Yeah, thanks for having me, and Happy New Year. What you're describing is kind of what we've talked about before, which is this is the soft landing path. It's just this oscillation between growth and inflation fears. My view is that our view at 314 is that we are kind of moving into this next phase of the economy, which is 2025 is going to be a year where we all kind of collectively try to discover what is the true nature of this economy. If you put this in economist lingo, you'd say, where is the neutral rate of interest? Neutral rate of interest is basically the interest rate, the Fed, where inflation and growth is perfectly balanced, inflation and job losses. And so basically, I think that the Fed in their most recent SEP and most market participants are misinterpreting bond market signals and basically have gone too far into this inflation concerns. My view is inflation is going to fall pretty hard this year, and that really the number one risk to the market is growth. And so neutral is we're going to get to the end of this year. The bottom line in my view is we're going to get to the end of this year. And I think collectively, everyone's going to be wondering if neutral has even changed that much post-pandemic. It's going to be much lower than what people expect.
Interesting. So you say the Fed seems to be misinterpreting bond market signals. So I guess by that, you mean that the fact that Treasury yields have gone up a fair bit since the September initial cut, and then even further after the December Fed meeting, that Fed officials see that as the market bracing for more inflation, and you say it's maybe not that?
Yeah, I mean, I think that's a very common misperception that I'm seeing out in the market right now is that, we had, like you said, 100 basis point rise in the 10-year after the September cut. And I think one really predominant narrative out there is the Fed made a policy mistake by cutting rates. And I just think that ignores initial conditions. If you going into that first rate cut, the Fed funds rate was well ahead. It was inverted with the 2-year yield and the 10-year yield. We've never had that kind of an inversion at the start of a cut cycle. And I think that was the bond market's way of telling the Fed that there was a real concern around growth and that there was a recession priced in to the bond market at that point. point. So the Fed came in and they basically reassured the bond market, and that's the rise in rates as the recession got priced out of the bond market. And I'd say that was stage one of the bond sell-off. And then, of course, Trump was elected, and that introduced some policy uncertainty and ultimately was reflected in the December SEP by the Fed. And so that was stage two of this bond sell-off. And so here we are at 4.6% on the 10-year, 7+% on the 30-year mortgage rate. And you'll have to ask ourselves when it comes to that neutral discussion I talked about, can the U.S. economy handle a 7% plus mortgage rate? And I think that the evidence is going to really become clear as we move through Q1 of this year and into Q2, that the real estate market in particular and the U.S. Economy broadly can't handle this level of interest rates. And so it's going to force the Fed to cut. It just depends on the real question for us all is what kind of pain we're going to have to experience along that path.
Yeah, I mean, because you really could look at the December market activity and say this is essentially what the market was suggesting, right? You saw as yields went up, obviously housing-related stocks went down, but so did other cyclicals. I mean, banks had a big reset lower. You had industrials as well. So I guess the point is, and you kind of alluded to it, what do we have to go through before we get to a point where either the Fed sort of capitulates to this view or you have, I guess, stock prices discounted in advance and then can recover?
Yeah, it was 7.5% peak to trough correction on equal weight in the month of equal weight S&P 500 in the month of December. So that's, I think, a little taste of what we have in store for us. It depends on how hawkish the Fed wants to be. This was our view, is that we're bullish on the market this year. We think the soft landing's intact, but ultimately Fed's going to have to cut. We have 100 basis point of Fed cuts in our base case projection. And I think that our view is that they're going to be a greater than 10% correction in the first half of this year. And it's going to relate back to this growth scare. So I do think it's going to be one of those things we have to keep our eyes out and wait to see when that growth scare starts to capture the market's attention. Our view, our framework is going to be looking at the housing market. I mean, in watching those home builders in particular, you're seeing stale inventory, completed inventory at the largest builders like D.R. Horton has backed up. Inventory that's been on the market for more than 6 months is at a multi-year high. I think that you're going to start seeing starts come down there, and that's going to be the very first domino to fall in this growth scare. So that's what we're watching. Yeah. I still think a few months before it starts, but yeah, it'll be some pain.
Yeah, and I know along those lines, you do fixate on the construction employment, which might look a little fragile as well. Warren, really appreciate it. Thanks a lot for laying out your view here.
Thanks for having me.
All right, up next, we're tracking the biggest movers as we head into the close. Here's Christina with those.
Well, there's one stock soaring over 100% on a collaboration with NVIDIA. And private label pet food, all the rage, and one stock is benefiting. I'll have those details next.
Cái mà mình nó không có trong cái lề lối mà mình đi trong cái, nhưng mà mình ngược lại mình đi theo cái đám đông nhiều hơn.
Dạ vâng.
Quý vị nhớ rằng cổ phiếu hay là đầu tư mà lợi nhuận cao nhất là khi quý vị phải đầu tư với uncertainty, tức là chưa biết. Tại vì khi mình đầu tư với cái mình biết rồi đó là quý vị sẽ bị rớt liền. Cũng như là tại sao một cái cổ phiếu nó đang lên ào vừa ra earning xong mà earning lại ngon đó, làm rất là lợi nhuận rất là cao mà cổ phiếu nó rớt 20-30% như chơi. Tại sao? Tại vì đó đơn giản thôi quý vị, tại vì nó quá sure rồi, nó đã certain rồi.
Giống như là nếu như là chúng ta đi theo cái xu hướng của người dân bình thường quá nhiều. Hôm trước thì anh Vũ cũng có chia sẻ với Kim Vi là một khi mà nghe một người bình thường ở ngoài đi taxi mà đề cập tới một cổ phiếu nào đó mà đang rất là cao nên nhảy vào để mua, thì lúc đó cũng là thời điểm là chúng ta nên bước ra để mà bán cổ phiếu, đúng không ạ?
Thì sẵn đây Kim Vi thì chúng tôi sẽ nhắc tới câu chuyện. Tôi nhớ ngày xưa thì lúc mà ai cũng mua Intel hết. Intel là một cái công ty làm về computer chips, CPU cho máy điện toán, rất là mạnh và lên hoài, hầu như là lên bất chấp thị trường luôn. Thì ai cũng mua Intel hết. Thì có một ngày đẹp trời đó thì không biết làm sao đó mà cái anh mà hedge fund của Goldman Sachs, là lúc trước tôi có dự phần trong cái group đó, thì anh không biết là khi nào bán cổ phiếu Intel. thì ảnh nghiên cứu mà ảnh cũng không dám nói nữa. Thì một ngày đẹp trời ảnh đi taxi ở trên đường Wall Street, thì quý vị đi có mấy cái taxi xe bus chạy tới lui, thì ảnh đi đến đó thì có một bà cụ đứng kế bên ảnh, thì thấy ảnh mặc đồ Wall Street thì biết ảnh đi làm rồi. Nói chú ơi, bây giờ tôi có mua Intel được không? Ai cũng nghĩ rằng Intel ngon lắm, cho nên bây giờ tôi nghĩ chắc tôi phải lấy tiền già ra tôi mua Intel. Thì khi mà anh đó nghe được cái câu đó rồi đó quý vị, thì anh ngay lập tức anh về và anh bán hết tất cả cổ phần của Intel, là offload gần 26 triệu cổ phần của Intel.
Wow.
Và Intel nó dip từ 46 đồng xuống còn có 25 đồng trong vòng 4 tháng sau. Đó là cái hình ảnh mà chúng tôi thấy rằng mình không bao giờ đi theo đám đông được, nhất là trong thị trường chứng khoán, nhất là trong đầu tư. Tất cả mình phải đi theo những cái uncertain, những cái gì mà mình mới bắt đầu mình suy tư ra thôi. Khi người ta bắt đầu người ta chê cổ phiếu đó thì quý vị bắt đầu hãy để ý tới và từ từ nghiên cứu nó.
Dạ.
Và đó là cái đầu tư mà chính nhất mà cần phải nắm trong cái thị trường chứng khoán.
Dạ. Thì theo như cái bài học mà anh Vũ vừa mới nói đó, là Kim Vi rút tỉa được là nếu như mà mình đi chợ ở ngoài mình đang đầu tư, mình đang có một cổ phiếu nào đó trong tay mà nghe người ta lào xào nói rất là nhiều về cổ phiếu đó, thì mình nên đi về để mà mình bán hết, đúng không anh?
Đúng rồi, quý vị thấy đó là cái bình thường. Tôi nghĩ rằng cái điều đó nó cũng phải đúng 100% đâu, tại vì cái gì nó cũng có cái phần trăm sai trong đó, cho nên chưa chắc là nếu mà mọi người họ nói mua cổ phiếu đó mà mình mua để sai, cũng chưa chắc điều đó. Cho nên quý vị cũng phải thận trọng trong mọi cái. Nhưng mà mặc dù vì vậy, nếu mà tất cả mọi người kêu mua thì mình cũng phải để ý rằng điều đó là cái cân mà bên mua nó quá nặng rồi.
14 minutes to the closing bell. S&P still up about 1.2%. Let's get back to Christina for a look at the key stocks to watch.
Well, it's the Midas touch of NVIDIA that continues, this time with shares of Cerence up, 128% today after the AI assistant software firm announced a collaboration with NVIDIA. Both companies will be working together to improve large language models, specifically for the auto industry. It's important to note, though, that this company is a smaller firm with a market cap of around $780 million. You can see shares now up 144%. Shares of online pet food retailer Chewy up 6% on a vote of confidence from Wolf analysts. They point to improved revenue, higher margins, and a growing line of private label pet products. Also of note, Chewy continues to open more brick and mortar vet care clinics, attracting new customers. Also seen as a positive. Mike?
All right, Christina, thank you. Still to come, alcohol manufacturers dipping in today's session. What's behind that drop, and could there be further downside risk ahead? Coming up, closing bell. We'll be right back.
Và khi mà nó bán tháo ra rồi thì tất cả cái gì cũng phải sụp cả.
Dạ.
Điều đó là cái điều bình thường.
Dạ, Kim Vi có nghe một cái câu rất là phổ biến thường dùng trong cái lĩnh vực này, đó chính là mình phải buy low, sell high. Nghĩa là mình bán khi mà nó rất thấp, mình bán khi mà nó rất là cao, mình mua khi mà rất thấp. Thì anh nghĩ sao về câu nói này?
Cảm ơn Kim Vi. Quý vị thấy là đây là cũng một những cái câu mà truyền miệng với nhau là mình mua là phải mua thấp mà bán là phải bán cao.
Dạ.
Buy low mà sell high thì mình thành công. Nhưng mà quý vị biết rằng đó 80% những người mà buy low mà sell high đều là những người thua hết trong thị trường. Tại vì cái câu truyền miệng này nó không đúng bao giờ cả. Buy là phải buy high và sell là phải sell higher.
Dạ vâng.
Tại vì quý vị nhớ rằng cái cổ phiếu khi mà giống như một cái lưỡi dao mà nó phóng từ trên nó phóng xuống, quý vị đưa tay ra chụp cái lưỡi dao đó, cái xác suất mà bị chảy máu nó sẽ rất là cao. Cổ phiếu mà khi nó trên tà nó tuột xuống, quý vị nhảy vô mà quý vị chụp cái cổ phiếu đó, nghĩ rằng mình buy low đó, quý vị sẽ end up sell low rồi. Mà hầu như là 80% những người mua một cái cổ phiếu mà trên đà nó tuột xuống, mua mình nghĩ rằng mình nó nu lô rồi, nó tới 10 đồng là thấp nhất rồi, nhưng mà không ngờ rằng mình phải bán nó chỉ có 20 cent thôi. Và tất cả những cái điều này nó hàng ngày nó xảy ra. Lý do đơn giản thôi, tại vì cái tư tưởng buy low sell high của mình chưa có được revamp, chưa được mình vẫn chưa có hiểu hoặc là thông suốt nó 100%. Cho nên từ đây quý vị về mỗi ngày phải đọc lại cái câu buy low sell high, no, buy high sell higher. Đúng rồi, đó là cái điều đó. Rồi chúng tôi sẽ vô cái chương trình và sẽ nói với quý vị biết rằng buy high sell higher là như thế nào, và khi nào trong cái kỹ thuật mua bán là mình mua high, Thật ra buy high nhưng mà thật sự ra nó không có high đâu quý vị. Khi mà mình nói mua buy high nhưng mà thật sự ra nó còn rất là low.
Dạ vâng.
NTV Fund là một tài khoản tổng hợp đầu tư cổ phiếu trên thị trường Hoa Kỳ do anh Nguyễn Thanh Vũ, giám đốc điều hành công ty cổ phiếu NTV Financial Group trực tiếp trao đổi. Với chỉ tiêu 30% tiền lời mỗi năm, quý vị sẽ được chia tiền lời mỗi 3 tháng với số vốn đầu tư tối thiểu 5.000 Mỹ Kim. Quý vị sẽ được công ty bảo đảm 100% không bị mất vốn và có thể rút vốn về bất cứ lúc nào. Xin liên lạc trực tiếp với Trish Thùy Linh tại 949 524 9352 hoặc gọi về công ty 714 251 6036 để tham khảo.
NTV Fund là một tài khoản tổng hợp đầu tư cổ phiếu trên thị trường Hoa Kỳ do anh Nguyễn Thanh Vũ trực tiếp trao đổi. Với chỉ tiêu 35% lời mỗi năm, quý vị sẽ được chia lời mỗi 3 tháng. Với số vốn đầu tư tối thiểu là 5.000 đô la, quý vị sẽ được công ty bảo đảm 100% không bị mất vốn và quý vị có thể thu hồi vốn về bất cứ lúc nào. Mọi chi tiết xin liên lạc số phone của Khánh Trân 714 227 4329 hoặc quý vị có thể tham khảo vào website.
Yếu tiên thì anh có khuyên họ vấn thân vào cái lĩnh vực này hay không?
Tôi nghĩ có nhiều khi có thể team mình yếu nhưng mà khi mình vô thị trường rồi thì nó thấy nó mạnh lại,
mạnh hơn,
sao nó mạnh
dạ
hơn hay là nó có thể nó có nó được cái sự cứng rắn hơn. Thị trường này không phải là thị trường cho những người mà đột xuất được. Mình không có thể
Welcome
làm.
back. A quick programming note. Don't miss a CNBC exclusive interview with Fed Governor Adriana Kugler. That's coming up in just a few minutes on Overtime at 4 p.m. Eastern. And up next, we'll tell you why shares of Rivian are ripping higher today, the details and much more when we take you inside the market zone.
Mình phải trao dồi giống như một người huấn luyện viên hay một người thể thao sport gì đó. Họ phải tập luyện mỗi ngày, họ phải huấn luyện họ chính mỗi ngày cái đầu óc phải tinh vi, không thể nào mà tối hôm trước quý vị nhậu xỉn thật là xỉn là sáng ra make một cái decision 300.000 được. Nó rất là khó để mà mình làm những điều đó. Mình phải làm tất cả những cái research của mình, nghiên cứu của mình để mà quyết định trong vòng có 30 đến 40 giây thôi. Quý vị nhớ điều đó. Thì nếu quý vị miss 30 40 giây đó, bởi vì hầu như đó là mất đi gần 80 tới 90% cái gain hay là cái lợi nhuận của cái cổ phiếu. Quý vị biết rằng đó một cái cổ phiếu đó mà trong vòng một năm nó chỉ lên có 26 lần thôi, đến 27 lần thôi. Mà 26 lần đó nó lên rất là cao. Thí dụ như cổ phiếu nó đang là 10 đồng, nó mở cửa ra là 12, 13 đồng là 20% gain rồi. Rồi cái quý vị vô mua thì nó nằm ở đó, nó không có lên. Nó cứ nằm ở đó hoài đến một ngày đẹp trời nào nó mở cửa lên 16 đồng. Thí dụ như vậy. Rồi nó làm như vậy tiếp tục đến khi nó lên tới 100 đồng. Tất cả những cái trading đó nó là trade overnight. Quý vị không có trade trong ngày được. Cho nên tất cả những day trader đó là họ bị thua lỗ ở chỗ đó. Họ nghĩ rằng nên tôi là day trader, trade nhất là những các bạn mà tôi thường biết khi mà bị thất nghiệp đó về nhà đó thì cái đầu tiên mình làm cái gì là mình nghĩ rằng mình trở thành day trader để mình kiếm chút cháo mình sống qua ngày. Nhưng mà quý vị không phải biết điều đó. Day trader cái 80 đến 90% day trader đều lỗ cả, không có lời được. Tại sao? Tại vì thị trường và cổ phiếu nó lên hoặc là xuống after the market, không đóng cửa rồi chứ không phải là sau khi. Cho nên nó mở cửa hoặc là đóng cửa và vì không có control được cái đó. Cho nên một năm nó chỉ có 20 mấy ngày thôi. Thì bây giờ tốt nhất mình phải ôm nó luôn, đúng không? Nếu mình định ra đúng hướng. Nhưng mà điều đó cũng không đúng. Không có đúng nha. Tại vì cái lợi nhuận long term trong tương lai mình sẽ cắt nghĩa. Tại sao cái đầu tư mà dài hạn nó với ngắn hạn nó khác làm sao? Tại vì cái đầu tư dài hạn không có nghĩa là mình mua một cái gì đó rồi mình ôm nó suốt đời, nó là dài hạn, không phải. Cái đầu tư mà lợi nhuận trong dài hạn có nghĩa là quý vị phải làm rất là nhiều cái quyết định đúng trong ngắn hạn để mà nó có được cái dài hạn. Dạ, mà cái quyết định đúng đó trong ngắn hạn nó phải là biết khi nào buy, sell, close và open một cái new trade nữa, cũng là cái cổ phiếu đó thôi. Nhưng mà mình phải biết làm điều đó để mà mình mang cái lợi nhuận của mình trong cái long term chứ không phải là short term.
Thì cũng có một câu hỏi mà Kim Vi cũng xin hỏi anh là thị trường địa ốc, nhất là ở Orange County của chúng ta thì lúc nào cũng rất là nóng, rất là hot. Thì so với một người nếu mà muốn đầu tư vào địa ốc, so sánh với đầu tư vào cổ phiếu thì tại sao lại không đầu tư vào địa ốc mà lại chọn cổ phiếu?
Cổ phiếu nó có một cái liquidation hay là có một cái tiếng Anh nó gọi là nó liquidate, cái là mình có thể mình bán và mình thu tiền lại về rất là mau. Thí dụ quý vị mua một cái cổ phiếu lốt nó liêu 300.000 đô mua Netflix thí dụ vậy đi, thì quý vị có thể bán được 350.000 trong vòng 2 ngày, 1 ngày, mà cái tiền quý vị bán nó ra đó chỉ có $5-10 thôi cho một cái transaction, cho nên nó cho một cái trao đổi đó, cho nên nó không có tốn quý vị bằng quý vị mua một căn nhà rồi quý vị khi mà close escrow rồi open escrow rồi đóng ra cái vô đi ra cái liquidation nó rất là chặt.
We are now in the closing bell market zone. Alcohol stocks under pressure on a new advisory from the Surgeon General. Brandon Gomez has the details. Plus, Phil LeBeau here on fourth quarter auto sales and what JetBlue's big fine could mean for the rest of the airlines. Brandon, talk a bit about the impact here of this Surgeon General action.
Yeah, hey Mike, we've been tracking it today. A new advisory specifically calling alcohol the third leading preventable cause of cancer in the U.S., behind obesity and tobacco, saying alcohol increases risk of at least 7 types of cancer, regardless of type of alcohol, contributing to nearly 100,000 cancer cases and 20,000 cancer deaths each year in the U.S. Now, the Surgeon General calling for several action items. Most notably, he wants new labels on alcoholic beverages warning of cancer. Picture those tobacco labels you might be thinking of. Alcohol makers offering no comment, pointing me instead to trade organizations. SVP of Science and Research at the Distilled Spirits Council emphasizing that it is the federal government's role to determine any proposed changes to warning statements. Clearly, Mike, this one will be one that Washington has to digest before Wall Street does, consolation off its session lows as investors realize that.
Yeah, obviously those stocks, many of them also had been quite weak going into this. We'll see how it goes from here, Brandon. Thanks very much. Phil, quite a move in Rivian.
Yeah, and we'll get to Rivian in a bit because we got the Q4 results today, Mike. And what we saw, we knew that December was strong for the automakers, and that's reflected in the fourth quarter sales for GM, Ford, Honda. Look, they all posted strong results. Look at GM, up more than 20%. And then we want to talk about Toyota. Now, Toyota was not great numbers, but they had a great year, especially when it comes to EVs and hybrids, mainly hybrids. Mike, they sold more than 1 million EVs and hybrids combined in the U.S. last year. Almost all of those, by the way, being hybrids. And speaking of EVs, take a look at Rivian. Posted their fourth quarter deliveries better than expected at more than 14,000. And they also had deliveries for the full year coming in as expected at more than 51,000. That was enough to give confidence to the Rivian bulls out there. We'll find out in February when they report their Q4 results if they hit gross positive profit for the fourth quarter, which is what they've been guiding to all year long, or all last year.
Yeah, I mean, we definitely want to kind of delve a little more into the bright spots there in auto sales. But talk about the airlines here after this action against JetBlue.
Yeah, and this is getting a lot of attention, not because of the amount of the fine from the DOT, $2 million. Look, that's a drop in the bucket for almost any company. What is significant here is they are the first airline that has been fined because the DOT said, you know what, you've had some flights that are chronically late. And because they're chronically late, you have not been able to correct that. We're going to fine you $2 million. When we reached out to JetBlue for a comment, they pointed out that, look, we have seen significant operational improvements in 2024, including better on-time performance during the year's peak summer travel season. As you take a look at the other airline stocks today, keep in mind that, I mean, this is really unusual. And we're not talking about all JetBlue flights here. We're talking about a small number, 4 on particular routes that, according to the DOT, were chronically late. So that's why you have the fine of $2 million.
You know, Phil, I always thought that the gamesmanship on the airline side in terms of trying to get their on-time rates higher was to pad out the scheduled, length of a flight and say, oh, we got in under that, even though we knew it wasn't going to be that long.
Right. Generally speaking, that is the case within the airline industry. Having said that, having covered this industry for more than 25 years, over the years, I've gone back and I've looked at, where do we usually see these late flights? You tend to see the same routes, not all the time, but particular airlines on a particular route, whether it's because it's to a small airport somewhere or for whatever reason, there seems to be always certain routes where you notice there are a lot of late flights.
Yeah, it seems like this fine must have been, the end of a longer process of the government trying to get some answers here. Phil, let's just quick get back to autos, because I'm wondering what we attribute the strength in the fourth quarter across the industry to. Is it more incentives, just simply, that consumers are in better shape?
strong consumer confidence. You look at auto sales historically, Mike, as consumer confidence goes, so goes auto sales. And you had greater incentives. Look, the transaction prices remain close to record highs. Auto loan interest rates, they've come down a little bit, but they're still relatively high compared to a few years ago. And there's substantial inventory out there. A number of automakers still have substantial inventory out there, but those incentives certainly did a lot to get people into dealerships.
Yeah, it's at least positive to see some of that momentum maybe continuing into this year. Phil, appreciate it. Thanks very much, and have a great weekend. As we head into the close, you see the S&P 500 up about 1.25%. It is, of course, going to now fall short of a gain over that Santa Claus rally period. It does end today, and we would have needed about another 50 points here, or call it 40 points in the S&P to get positive. We also are down on a week-to-date basis, down about 0.5%, but definitely a bit of a relief trade today. Volatility coming down as well. That VIX coming down below 17, and very positive market breadth as well. You have about 2/3 of all volume to the upside. So a sort of an upbeat end to a week, but the market's still down for the 4 days. That does it. The closing bell. Let's send it into overtime with Morgan and John.
Well, that bell marks the end of regulation. PCOS challenge, ringing the closing bell at the New York Stock Exchange. Fox Development Holdings doing the honors at the NASDAQ. Not exactly a Santa Claus rally, but at least the coal's out of the stocking. Stocks jumping to end the holiday week, with every S&P sector closing higher, and big pops for names like NVIDIA, Palantir, and Tesla. That's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Fort with Morgan Brennan.
Well, coming up in just a moment, a cannot-miss interview with Fed Governor Adriana Kugler. We'll get her outlook on rates, the economy, and much more.
Plus, Zscaler's CEO is going to join us with his reaction to the Chinese hack of the Treasury Department and how he views the cyber threat landscape in 2025. And we begin with the Fed and a rare conversation with a voting member of the central bank who took her post in 2023 and hasn't done a U.S. TV interview since then until now. Let's bring in Fed Governor Adriana Kugler along with our own Steve Leisman. Steve, take it away.
Hey, Jonathan, thanks very much. I am here in San Francisco at the annual meeting of the American Economic Association, where something like 5,000 economists are descending on the city. I don't think they can set it straight, but in any event, they'll try. Thank you for joining us, Governor Kugler.
Thank you so much, Steve, and Happy New Year to you.
Thank you very much. I want to start with an area of expertise that you've had over the decades, I guess, which is as a labor economist. One of the things that motivated the idea of rate cuts beginning in the summer of 2024, which is now last year,
yes,
was the concern about weakness in the labor market. Do you see weakness in the labor market? Does it cause you concern? It seems like once again we have another strengthening going on.
Yeah, absolutely. So let me start by saying that we're ending, or the economy is ending the year in a good place. Mm-hmm. The economy is resilient. The economy is growing at a good pace. It's projected to grow at 2.5% this year. It grew at more than 3% last year. Disinflation has been happening, so it came down from 7.2% to now 2.4% in terms of the headline number. In terms of core PCE, it has come down by about half, from 5.6 to 2.8%. In terms of the labor market, that has been something that has helped to get to that place. The labor market remains resilient. Certainly, the labor market, as you well remember, back in 21, 22, right after the pandemic, was extremely tight. Mm-hmm. A lot of people left the labor market. There were excess retirements. People left in the prime age group to go and take care of their children because they had to make choices. So all of that created a lot of tightness. And you remember the so-called period of the Great Resignation. So quits were very high, but job creation and job vacancy rates were very high. Right. And the vacancy to unemployment rate was basically at 2-to-1, 2 vacancies for 1 worker. Businesses were having a really hard time getting workers. So where are we now? Fast forward, right? The labor market has been cooling, and it has been cooling gradually. That has been very good. In a sense, it's been easier now for businesses to hire, but workers are also experiencing an increase in real wages. Right. So that all has helped. So where are we now? Real wages are still up. That's a good thing. Mm-hmm. at about 1.6, 1.7%. The unemployment rate has come up a little bit, has stepped up.
Well, I was going to ask about that because there is the SOM rule, and that seems like it's already beyond that in terms of how much the
it has
unemployment
not
rate.
kicked in, actually. I mean, that's a statistical regularity, but it has not actually quite kicked in. It's
So it doesn't make you concerned about a recession when it comes to.
No, I think the key again is that this has been gradual. The unemployment rate has been increasing gradually. It came from about 3.4% back in April 2023, which was the lowest rate since 1969. It increased to about 3.7% in the fall 23. It's now at 4.2%, which is still very much within what we consider historically low, right? So it's still at low levels. Of course, we're watching closely, and that was part of the reason why we decided to decrease our rates in the fall.
But have you cut them enough now to a situation where you're no longer concerned about weakness in the job market?
I think we're seeing that it's a stable situation, that the labor market is resilient, that the labor market has rebalanced. We want to keep it at that level. That's what we want. And we feel it's staying resilient. The unemployment rate.
Một cái thời gian rất ngắn để mà họ xài cho một công việc khác thì họ không thể nào họ lối từ nhà được. Đúng không Kim Vi?
Dạ. Và nếu mà cho một người vừa mới bắt đầu thì cái lời khuyên của anh là như thế nào đối với những người vừa mới bắt đầu và muốn thử, muốn vấn thân vào thị trường chứng khoán?
Cái chữ mà bắt đầu đó là có nghĩa là không phải là bắt đầu nha quý vị. Bắt đầu có nghĩa là quý vị đã biết cổ phiếu, đã theo dõi cổ phiếu, mặc dù có một người nào đó họ đã giúp quý vị trade hay là đầu tư rồi, thì bây giờ quý vị bắt đầu để mà bước vô tự mình làm, chứ không phải là bắt đầu có nghĩa là chưa bao giờ biết về cổ phiếu.
Nghĩa là đã có những cái kiến thức trước đó rồi.
Dạ. Đã có rất là nhiều kiến thức chứ không phải là cái kiến thức. Tại vì show của chúng tôi là rất là technical. Chúng tôi sẽ bước vào hai khía cạnh fundamental, có nghĩa là căn bản, và một khía cạnh thứ hai đó là kỹ thuật, đó là technical trading. Nó là thuộc về hai cái dạng mà quý vị phải dùng những cái công cụ mua bán nó khác, và những cái công cụ đó chưa chắc là quý vị có thể thấy trên màn ảnh của computer được. Mặc dù những cái brokerage house họ offer quý vị những cái software, những cái dữ liệu để mà đi theo cái RSI hay là theo những cái percentage của William percentage rate, những cái đồ oversold overbought đó, thật sự trên nguyên tắc nó chỉ xài được khoảng có 10 tới 15% thôi, mà tới 85% failing. Tại vì quý vị thí dụ như một cái cổ phiếu mình bây giờ chưa có đào sâu được, nhưng mà nói phớt qua cho những quý vị nào trading, một cái cổ phiếu có thể bị oversold for a long time, rất là lâu. Ví dụ nó vừa bị xuống tới 10 đồng, cái mình tưởng là tới 10 đồng là nó bị oversold, nhưng không, nó có một cái giai đoạn oversold rất là lâu, có thể là 1 tháng, có thể là 2 tháng. Còn khi mà nó lên cũng vậy, có những cái giai đoạn nó lên và nó không phải nó lên tới 20 đô cái nó ngừng lại, không phải, nó sẽ bị overbought for a long time, nó lên tiếp tục hoài cho đến một giai đoạn mà quý vị bị stress, tức là không còn chịu nổi nữa. Và khi mà quý vị nhảy vô đó thì lúc đó nó bắt đầu nó đi xuống. Thì tại sao như vậy? Mà chuyện đó không phải xảy ra thường xuyên, mà lâu lâu một lần, mà nó xảy ra thường xuyên. Mà có nhiều người cứ ngồi bứt tóc hoài. Tóc tôi thì không phải bị bứt đâu, làm việc overload nó bị rụng chứ không phải là tại vì tôi bứt tóc. Cho nên mình phải biết là cái indication nào mà nó thật sự nó phải tự mình develop được,